All right, welcome everybody to ABG Sundal Collier Investor Day, and our first presentation here we have StrongPoint CEO Jacob Tverabak. Please go ahead, Jacob. The stage is yours.
Thank you so much, and thank you for allowing me to present one of the most exciting companies on the Oslo Stock Exchange, namely StrongPoint. I'm the CEO, Jacob Tverabak, and I'll take you through an overview of what StrongPoint is all about. So if you may go to the first slide, for those of you that do not know much about StrongPoint, in short, we are a 1.1 billion Norwegian kroner company as per last year, achieving a little bit in excess of 100 million EBITDA, or 8.8%. We focus on retail technology, and I will be explaining what we and I mean with retail technology in StrongPoint the setting. Our own offices are focused around 4 countries: Norway, Sweden, the Baltics, which by the way are 3 countries, and Spain. So 4 geographic areas, and we have an increasing growth of our partner network to sell our proprietary solutions elsewhere. Lastly, as a very short intro, which is also important, is the fact that we're not only not only selling, servicing, but also installing and supporting our solutions. We provide both software and we provide both hardware, and it's this combination that is unique and needed for our customers. So with that, I wanted to go to the next slide to provide a little bit of backdrop. And we had this backdrop at our strategy update session earlier this year, prior to COVID-19. At that point in time, we said that the retail landscape is in a large transformation, and that transformation is driven by a number of factors, but primarily by e-commerce. And of course, with COVID-19, that development is accelerating. There's not a single retailer out there that is not talking about e-commerce and the massive growth that the e-commerce is experiencing. If you go to the next slide, because that backdrop of e-commerce and e-commerce growth is what is driving what we at StrongPoint call the double opportunity. Double opportunity because on one hand, you have the brick and mortar, so stores, being put under pressure from e-commerce, where basically you see e-commerce growth taking some of the sales from the stores, which lead to a margin pressure in the stores. And of course, with COVID-19, there is also the safety element of shopping. Is it safe to go shopping? And StrongPoint provides both efficient solutions to gain productivity in the stores, as well as a safer shopping experience. The other part of the double opportunity for StrongPoint is exactly within e-commerce, and rather than only establishing an online presence, which most retailers should or would have done by now, it is really about scaling up and really stepping up the online presence. And StrongPoint provides what I would call world-class solutions, both on picking, but also on delivery options for retailers. If you go to, I'll try to put a little bit more juice on what do we mean by the in-store solutions we have. So on the next page here, you will see an overview of a store where we have laid out some of the solutions we have. So this is a non-exhaustive list of the solutions we have. And as at least Norwegians, Swedes or Baltics, you would have seen our solutions that we both own but also sell for third parties when you are in the stores. That could be self-checkout machines, that could be electronic shelf labels, it could be cash management systems with CashGuard. It could be workforce management tools. You really don't see, but you will experience that by having the appropriate number of staff in place. And also touching upon the e-commerce opportunity, of course you will in some instances have seen or observed pickers in store with our picking solution, and also our click and collect lockers. So these are some of the solutions that we're providing to our customers in the store. Going to the next slide, then looking at, well, what do StrongPoint offer in terms of its e-commerce offering? And in principle, you could say that we deliver everything from a order has been placed in a web shop. So everything after a order has been placed in a web shop, we do. And the solutions we have are very modular, so you could essentially be picking the solutions that you want to integrate with existing systems you might have. What this picture shows is an illustration of the two biggest cost items, and that is picking and its delivery, or last mile of our solutions, or of grocery retail and retail in general. We have focused our solutions around grocery retail, and we're doing that because there is this is the by far most demanding online space there is. There is a lot of SKUs, a high frequency of purchases, temperature zones. So if we master this, we master basically anything else. What this slide shows is the different operational choices you have as a retailer. You could be doing the picking in store, and you can be doing the picking in dark store or dedicated dark stores. And in terms of deliveries, you could be delivering to home, to click and collect, or BOPIS as it's called, buy online and pick up in store, or pick up elsewhere. And if the person holding the clicker is pressing 2 more times, you will see an overview of the solutions that StrongPoint offers in this respect. On the very right-hand side, for instance, you will see an illustration of the mobile click and collect lockers that was actually just announced yesterday, was installed for Willys at 4 Circle K's. I could spend 1 hour talking about this slide and why manual picking in many instances is superior to the sort of automated picking, which require a lot of investments up front. But rather than spending today's time on that, I will rather encourage you all to attend tomorrow's webinar that we have on how to make online profitable. So with regards to StrongPoint's financial status, this next picture or pie chart shows an overview of how the 1.1 billion turnover is distributed along the different business segments we have. The first thing you will see is that retail technology is about 3/4 of our revenue in 2019, and actually as per Q1 this is 80%. We have about 1/3 of the sales within what we call in-store productivity solutions, which include amongst others electronic shelf labels, shop floor logistics, which is our proprietary order management system, and more. We have cash management constituting some 20%, where it's important to recognize that the growth in cash management is really seen in the Mediterranean parts of the countries, not though during the very challenging COVID times, but in general. And we're also seeing our checkout efficiency solutions, which self-checkout solutions and Vensafe, as some of the examples, being some 5% of revenue last year. E-commerce growing from 5% last year to 6% in Q1. And when you look at the revenue contribution of 5%, that is actually upped by an EBITDA contribution in 2019 of 8%. So very pleased with that. If you go to the next slide, to provide a little bit of overview of what is the geographical footprint, you will see that StrongPoint's main markets, where we have our own offices, is focused around these 4 areas: Norway, Sweden, the Baltics, and Spain. And we have ample opportunity, as I will show, to grow within these 4 regions. But in addition to that, we have a growing and intensified focus on our partner network. We have some of the best solutions when it comes to both e-commerce, checkout, and cash management that we would like to bring out to the rest of the world, and that we're doing through partners. If we then go to the next page, which reads significant growth potential for retail technology, it's fair to say, and at StrongPoint we believe in focus. And when I say that, I say that because when we are looking at the customer segment that we are serving, we are focusing our efforts on the grocery retail segment. And there are 3 reasons why we do that. Number 1 is if you compare the grocery retail turnover to the total retail turnover in these markets, that constitutes about 3/4 of the revenue. Secondly, if you look at the expected investments in retail technology, actually grocery retail is expected to constitute 80% of the total retail technology spend. And lastly, and this we also said before COVID-19, you know, the grocery retail segment is a very resilient segment, which has proven again in the COVID-19 situation. And we just believe that if you really are able to serve this high demanding segment of grocery retail, then we're going to have significant spillover effects to other retail segments. That could be do-it-your-own stores, they could be pharmacies, etc. Going to the next page, and you can click 2 times to show the stated financial ambition for StrongPoint. We presented this at our strategy update session earlier this year. 2.5 billion Norwegian kroner organic growth will get us there in 2025. So 2.5 billion in 2025 from today's 1.1, and in EBITDA margin improvement from last year is about 9% to 13 to 15%. And it should be said that we have both revisited and restated this this ambition after COVID-19. I think in many instances the value proposition of StrongPoint is even higher, in particular on e-commerce. Next page showing the build-up of how we get to 2.5 billion. And this has followed a very diligent and thorough process with the entire management team, the board. And the main story is that we expect growth to come across the board of our solutions. Notably, it should be said, e-commerce is expected to grow quite massively, contributing some 400 million growth of the growth potential in 2025. If anything, the COVID-19 situation has at least uplifted my ambitions for the speed of when we achieve this. And I'm very excited about the opportunities to bring out our e-commerce opportunities in the world. It should also be said that you see a dotted line under cash management, which is to indicate that we do anticipate a continued decline in the use of cash and cash management systems in Norway and Sweden. But still, even with COVID-19, some of the Mediterranean markets and other markets that we have really studied in detail have in excess of both 70 and 80% cash share, which is so high that there is a very, very good potential to still sell the fastest and most reliable cash management system out there. In sum, on the next page, We have tried to formulate the strategy and what we're achieving in this picture. We have 3 what we call what pillars, and we have 2 how pillars of how we will be supporting the strategy for StrongPoint. Starting with pillar number 1, we expect to continue to penetrate the key markets, Norway, Sweden, Baltics, and Spain, with more of the solutions that we have a deeper relationship with our clients. And we expect that a lot of the growth will also be coming from those markets. Number 2 is ensuring that we take the solutions that we have that really are world-class out in the market. And that includes, in particular, e-commerce. It includes the cash management systems in both cash-rich, but also areas where safety or security is needed for cash. And it's also in checkout efficiency, where both the efficiency of a shopping experience, but also the safety or perceived safety of customers is very much in demand. So our contactless or contact-free solutions are very much in demand there. Lastly, and pillar number 3 is something we're very proud of, and that is the fact that with a strong market position in the key markets, we are also able to attract top technology companies from around the world. So we are, as such, being allowed close to exclusivity for many, or exclusivity or close to exclusivity for many top solutions. That could be Pricer, it is Sunrise Technology, it is Reflexis's workforce management solutions, and we have many more very exciting discussions ongoing. And lastly, it's the 2 how pillars. Number 1, we will continue to invest in our people to both attract, retain, and develop the very best people to deliver on the what pillars. And we're investing more in people than we have ever done in the past. And lastly, also, in particular in these times, it feels, in lack of a better word, comfortable, if I may use such a word, that we have a strong balance sheet, we're profitable, and we have cost control, which enable us to both grow profitable, but also take 1 or 2 hits from the COVID-19 situation going forward. So that was an attempt to sort of, provide the overall strategy picture for StrongPoint. I will finish off with 1 or 2 last slides here. One showing the immediate impact as we see of the COVID-19. So there's a slide here with showing some red and greens with regards to what are the immediate effects of COVID-19. And we don't do guiding, but this is merely to provide a perspective on how COVID-19 is hitting StrongPoint. And it's hitting us, on the one hand side, if you look at retail technology, the overall sum is positive, right? We see the growth in e-commerce and the growth for solutions that ensures an efficient and safe shopping experience is massively getting traction. On the other hand side, of course, with Spain in particular having been in a lockdown situation, the demand is very difficult to do something with when stores other than the grocery stores are closed. And in the DIY segment, we're actually seeing now coming from a period with a bit of shock and awe, it coming into a period with more demand, in particular in hardware and do-it-your-own. Outside retail technology, labels business, where we provide labels to fast-moving consumer goods, are experiencing a very solid growth, whereas our cash security segment, which provides cash security cases to transport cash, is more or less negatively impacted as the international customers are experiencing lower general retail demand. So in sum, on the last page, why StrongPoint? Well, we are growing from 1.1 to 2.5 billion Norwegian kroners in 2025. We are improving the quality of the revenue base by growing or getting a much higher share into a growing segment such as e-commerce, and we expect a quarter of the revenue to come from e-commerce in 2025. We're more than doubling the recurring revenue base that we have, and we're doing so profitable all the way along. So what is there not to like about StrongPoint? And with that, I open for some concluding questions from Petter and ABG.
All right. Thank you very much, Jacob, for your presentation. So I have a couple of questions for you. First off, COVID-19 seems to have accelerated the shift towards online grocery shopping. How has this impacted you, and do you think this will continue in the long run?
Well, I think a lot of people have, or a lot of retailers are now experiencing that what you were sort of expecting to happen in the next 3 years is actually happening in 3 weeks. Right? And I think that what you're experiencing now is a shift into a online world where customers that normally would have been going to the brick and mortar stores have finally gotten their eyes open for what e-commerce has to offer. I think this is a permanent shift in consumer expectations about how a shopping experience should be. That's not to say that the extreme volumes you've had today not to come down temporarily, but in general the growth will continue, and we're pleased to see that many retailers and grocery retailers are stepping down from the fence and finally putting some action behind their long-awaited online plans. So we have more exciting and ongoing discussions about how we could be supporting retailers and grocery retailers than ever before. And as an example, tomorrow we have a webinar. We had calculated 100 people to join, and very quickly that was oversubscribed, and we had to sort of over-invest or invest more in more capacity to accommodate for that. So a lot of interest.
All right. Yeah, that leads me into the next question. Because the grocery sector overall has seen a boost in sales during this pandemic, could this possibly lead to more investments in new retail technology for you?
Absolutely. Absolutely so. I think what we have talked about all the way along as the double opportunity for StrongPoint, it doesn't only hold true, but it's also accelerated in time and magnitude. What you will see is in the stores with e-commerce growing so rapidly and massively, you will need to invest in the stores to both make them more efficient but also more safe, as our, for instance, checkout efficiency solutions would cater for. And when you look at sort of the online growth that's out there, I mean, the growth is just fantastic, and we're expecting, as I said, this to continue.
All right. So you mentioned that you have a strong balance sheet earlier, and when the pandemic blows over, do you think that you will see more M&A opportunities available for you?
But I think on one hand side, you could, we foresee that there should be opening up opportunities of, say, struggling companies, so you'd be able to do bargains. On the other hand, I mean, the companies that we're looking at to really reinforce the strategy of StrongPoint are not the companies struggling. These are the companies that are already in the e-commerce space or catering for grocery retailers. But absolutely, I mean, the solid balance sheet that StrongPoint has, and with our profitability, that's of course enabling M&A. And although we have a 2.5 billion financial ambition to grow and grow organically, that's not to say that we will not be doing M&A in addition to the 2.5 billion.
Okay, perfect. I think we are running out of time here today, but thank you very much, Jacob, for presenting here at Introduce Day, and good luck with the company ahead.
Thank you so much. Now I gotta run and sell more solutions. Bye-bye.
Thank you. Bye-bye.
Testar vi här då. Hallå, hallå. Hallå, hallå. Hallå Ulrika, hör du mig? Rickard här. Hallå, hallå. Testa, testa. So we're continuing with our busy agenda today, and for any new viewers, my name is Rickard Anderkrans. I am a equity research analyst in the healthcare sector here at ABG Sundal Collier. Our next presenter is Ulrika Albers, the CEO of MedicaNatumin, who will present her company today. So without further ado, Ulrika, the floor is yours. Thank you.
Thank you very much, and it's great to be on a distance here in Habo, where we have our production facility today. So if you change to slide 2, Richard, would be great. I will guide you through a little bit about the background of MedicaNatumin, do a short introduction of what we actually do as a company. I'll also go into our strategy and a little bit more around our key areas and products. Of course, I'll give you some news in terms of launches and also some figures. And I'll wrap up looking ahead in the future. So, slide 3. So, who's MedicaNatumin? We are a company that develops and manufacture supplements, food supplements, medical devices, dermatological and cosmetic products, all based on a solid knowledge and research. We also have distribution rights for organic food and skincare products for the Norwegian market. And we are listed on the Nordic Growth Market list in Stockholm. So that was a very, very short introduction. And going to the next slide. We're a local company. We're based in Sweden and have our base in Sweden and Norway in those two markets. But we also have a global presence. We work on a global market. And in Habo, we have our own product development team. We have our production plant where we do both food supplements and produce cosmetic products and dermatological and medical devices. We have our supply chain in Habo also, and export. We work a lot with business to business, basically with partners around the world. In Jönköping and in Stockholm, we also have personnel. We have the Swedish sales and marketing company that work with this market in terms of getting products out to through different channels and through consumers. In Tönsberg, we have our latest acquisition, Vitalkost, and they also have their own organization with about 20 people focusing on sales and marketing, but also on warehouse and logistics. Today, we're around 70 people in the company, so we're growing year on year in that respect. So going to slide 5. At the end of 2017, we set a strategy for MedicaNatumin. For those of you that are not that well, and doesn't know the company that well, Medica Clinical Nord, an established company within the health food industry, acquired Herantis Pharma in 2016. So the focus of the strategy we set for the coming 3 years was really to get those two companies together and work with the synergies and build a stable platform for future growth. So that was all the strategy was about. And the strength of our strategy today is that we have all essential functions within the company and organization. So we set a vision, which was your quality of life and well-being our priority, a business idea, and we also set quite a challenging goal to reach 200 million in turnover by the end of 2020. So now we are at the end of now we are in the last year of our strategy, and of course we're going to work on continuing and extending that for a few more years. So to be able to achieve both the vision, business idea, and our financial goals, we needed some strong strategic pillars that we could work within. And one of those is, of course, the front-end growth, where we have our sales and marketing, where we have our export business, We needed to have an efficient back end as well, where our product development, our patents, our production and logistics and quality would help us to achieve those goals. And also we could do this with acquisitions of both product licenses, companies, and with the right competences in terms of our co-workers and employees in the company. So that was the basis of our 3-year plan. So if you can change to our slide 6, our vision. So our vision for us, we are in the health and well-being industry, and our vision is really guiding us to in all steps, both in product development, and it should guide us in the whole process. And your quality of life and well-being, our priority, that is the driving force in the organization, from idea to the experience of our products. Which change slide? So setting our business idea was a way of us to guiding what our core business should be, and our innovative and sustainable products for health and beauty in every home really sets the scope of what we're going to work with and what business that we are in. And the foundation of the business is to offer innovative products and brands built on a sustainable and scientific background and base. And the starting point should be in the Nordic, especially in Sweden and Norway, with and then from there develop an international business via partners and cooperation with the distributors. And the goal to contribute to positive health trend and offer people improved quality of life. That should also be the main focus of all our products and the offering that we are making to the market. So let's go into some of our product areas a bit more. So slide 8. This is really a summary of what our offering consists of, and it is well-documented solutions in men's and women's health in the category of dietary or food supplements, medical devices, dermatological and cosmeceutical products. And also for the Norwegian market, we do focus on distributing organic food. So that's a big part of our Norwegian business, and especially then to the grocery trade. Slide 9. So we do produce in Habo medical devices, both class 1 and class 2. And medical devices are quite close to pharmaceutical products, but it's the mechanism of action that sets those products apart from that group. And it's a very regulated product area to be in. And here we are ISO certified, work we did in 2018. We have a notified body that do audits, and the products we have in our medical device range have strong patents behind them and are very well documented. And we do manufacture these products in our plant in Habo, so they're made locally. An example of how we actually prove that our products work can we see on slide 10. To be able to live up to these strong and tough regulations that are put in place for medical device products, we also need to have good clinical documentation. And during 2019, we conducted a study on one of our products. It's a foot cream, multi-use foot cream for athlete's foot or foot fungus, cracked heels, and other dryness and other foot problems. And this study really showed that we have an effective product. The study was conducted in 3 centers in Sweden and with 46 patients. And the aim with the study was to show a clinical reduction of symptoms by 33%. And this we really overachieved. And we saw a significant decrease with 53.7% And the treatment also had effect on other existing problems, as I mentioned before, dry feet, cracked heels, and so forth. And those were improved by over 50%. The patients also liked the product very much, and almost 70% would recommend this product. So a very good, strong conclusion that our foot cream has an effect and is safe as a combination treatment. So we have partners that distribute this product around both in Scandinavia and in Europe, and it's Orkla that distribute this product under the name Salvequick Foot Rescue. It's launched in Sweden and also launching this half year in several European countries, and we have a rollout plan reaching for 1 to 2 years further. This product we also have in the Middle East. So very, very exciting results, and also good that we have such a good documentation on the product medical devices that we have. So going into our next product area, which is the cosmeceuticals, and if you can change to slide 11. So we have some strong global brands that are cosmetic skincare products. And here we also have an ISO certification, so it means that we have a very high standard and level of our production. It's BHG and Dermyn that we work with, and all manufactured in Habo. And what really sets these studies aside, or these products aside from competition, is the strong documented evidence. BHG, for an example, was the first cosmetic product. It's an anti-aging product that actually had results of its effectiveness published in the British Journal of Dermatology. Dermyn is a facelift product, a firming product, which also has double-blind, split-face studies conducted showing its effect. So important for us. So change slide. Dietary supplements or food supplements is also a very regulated area, and here we work with a number of products that we have both in Sweden and on export. Many of them produced also in Habo, and you can see some of our brands here. Now in Corona times, we have great demand of Ester C and Kyolic as an example, and we do have Ligiplex also, which is a strong brand in the market here in Sweden. Our distribution channels on the next slide there, Richard. We do sell our products in several channels. Pharmacies, department stores such as Åhléns, and that's especially then our cosmetic products. Health food stores such as Life, Hälsokraft, and now more than ever online, and both online on Apotea as an example, and all Lyko, all the pharmacies have their own online stores as well. So we see a movement towards that kind of business, especially in the last few months. But then again, the health food stores are a really important channel for us, with a lot of expertise and that can guide our end consumers in making the right choices. We do also have our products business to business and private label globally. So we have several parts of our business and several platforms that we can work from. We do work with certain of our distributors. We do everything from product development to production of those products. Different channels and different ways of distribution depending on market and product and the customer that we work with. Okay, so let's look a little bit about the numbers. You can probably just skip slide 14 and move to where we see our development over time. Yeah, are you with me, Richard? Yeah, good. So on the slide, on the graph to the left, you can see the development of our turnover over the last few years, and it's a steady growth, with 2018 as an exceptional year for us, and mainly due to BHG entering the Chinese market, and we saw a big boost during 2018. Unfortunately, in 2019, we don't see the same development, and that's basically due to the export side. And that's something that we also have focused a lot on in 2019 to build up that again, and making some corrective actions, and also expanding our focus on export market, and especially in China. So we have a good platform for future growth. 2019 was also a year where we focused a lot on growing by acquisitions, and which resulted in a positive acquisition of Vitalcost at the end of 2019, and we took over the company 2nd of January. So I'm coming back to Vitalcost a little bit later. You can see we have had strong growth margins, EBITDA okay also for 2019, but as I said, 2018 was an exceptional year for us. So let's move to Q1 figures on the next slide. Here we start, of course, out with a fantastic growth of 80% for the quarter. We almost double our turnover compared with the period the year before. And that's mainly due to the acquisition of Vitalcost. We still see some stable business the first quarter in the other areas or other companies in line with last year. Looking at turnover of the market, where you see our pie chart, and I'll try to guide you through a bit here. Not unexpected, the Norwegian business is really now 50% of our turnover, and that's then the Vitalcost acquisition that stands for a majority of that. We have a larger part of our business going into Europe. Sweden then is, of course, declining a little bit, and we have great potential for our export market. We have nothing to China in Q1, depending on COVID close down, which is quite natural. The turnover per market is going to differ quite a bit over the quarters, depending on when the big export orders actually come in. Our export works in a way that we have few deliveries each year, so it depends on which side of the quarter those delivery points are. So that will differ, but we see potential in both the Swedish and Norwegian market, but also in the other markets, and something that we are focusing on. So talking about Norway, we can move to the next slide, which is focusing a bit more on Vitalcost. And we acquired this really well-established company around 2019, 2020. And it's a very fine company with some great brands and a very, very good setup. So they focus on selling natural healthcare products and organic foods, and both on its own brand, but also distributing other brands. And here we're adding another segment to our business. We haven't been into organic food or as much to a grocery trade before, but here Vitalcost is really getting their feet into that area in a very, very good way. So it's a good segment for us to be in, especially in Norway. So slide 19. Vitalkost is a perfect fit for us, for MedicaNatumin. So it brings us to a leading position in the Norwegian market. And the turnover last year was 73 million. We see a good contribution already in Q1 with 27.4 million and over 3 million contributing to the EBITDA. And here we see a good growth in all the segments. And now we're focusing on the synergies of what this acquisition will give to the full MedicaNatumin organization. So moving on quite quickly into slide 21. One way of growing is, of course, by launches. And I'll show you here some product launches we have recently done. A neck and décolletage cream in the BHG assortment, where we have Jessica Almenäs, that is our influencer. Dermyn, we're launching 3 new products into both the Swedish market and Chinese market. So again, with new marketing concepts around both these products. Page 22. Fast Track was a success 2019 in Vitalkost in Norway, and here you can actually see an example of the synergies that we are aiming to gain with this acquisition. So we're also launching this product in Sweden right now, and it's a weight loss product. It's a dietary supplement that consists of slender core to help reduce weight. So when your jeans have shrinked, it's a perfect product for that. So the last slide, slide 23, is really for us looking ahead. We have a stable plan, both for our export and other areas. We believe that we have a strong position in the Nordics and we can continue to grow there. We can continue to grow in the organic foods into the grocery trade as well. Launching new products is important, and we have some good pipeline coming up. And our focus is to make sure that we gain as many synergies as possible for Vitalkost into this group. And the acquisitions is, of course, something we're going to continue with, both for interesting products and companies. So we have a strong organization to actually bring this forward. We are on a good way to reaching our financial target of 200 million in 2020. So I'll end there, Richard.
Excellent. Thank you very much, Ulrika. So we'll do a very brief Q&A session now. So looking at the Chinese market is obviously a very interesting market opportunity for MedicaNatumin. Could you talk a bit more about your efforts there and the current commercial status as the country has been reopening from COVID-19 recently?
Yes, we saw the shutdown early Q1 or the full Q1, and there was also a focus of the sales. We are mainly on the Alibaba platforms there, so the cosmetic products were not that type of products that the Chinese consumer wanted right then. Now we see it's picking up. We see that we can deliver into China again, and we are expanding in terms of food supplements now under MedicaNatumin on Tmall, and that's the Tmall Global. We do have a good platform for Dermyn. Our distributor there had actually a 4-minute TV slot on national Chinese TV a few weeks ago. So, and also with our continuing work to establishing BHG even more. So we have spreading our business on more products and areas just than BHG, which has been in the past. So a big focus forward for us, continuing.
Excellent. And just as a final question, so there's another region that might be a bit overlooked by the market is actually the Middle Eastern market. Could you talk a bit about the market dynamics there and your commercial efforts and what we might expect for 2020 and beyond in those markets?
We do have a distributor that are starting to build up the business in the Middle East. And we see it as a potential that we can do really well. Of course, we're going in there with our medical device products and cosmetic products. So they are really looking for products with proven effects that are Swedish, that are produced in Sweden with good data behind. So we have just delivered our first deliveries to the Jordanian market, but it is very, very long term. It takes a long time to establish in the Middle East, and the regulatory aspects are quite prolonged. So long term, I think it will be very good for us.
Excellent. Thank you very much for participating today, Ulrika. In the interest of time, we will move on with our busy schedule. Wish you the best of luck going forward.
Yeah, thanks.
Thank you. Take care. Bye. So we're moving on with the busy schedule today. So for any new viewers, my name is Rickard Anderkrans. I'm a healthcare analyst here at ABG Sundal Collier. Without further ado, I will leave the word over to Pekka Simula, the CEO of Herantis Pharma. So Pekka, the floor is yours. Welcome.
Thank you, Rickard, and good morning, everyone. Great to be here. So Herantis Pharma, and if we jump to slide 3 first for quick introductions on myself. So I'm the CEO for Herantis Pharma, as Rickard said, since 2013, and you're also looking at a very happy CEO, even if also a very busy CEO. Just overnight, we completed a funding round, as announced this morning, so an accelerated book building process, and one is always very happy after a successful funding round, especially as we were able to bring in a new, very highly valued anchor investor in Sweden. But we move to the company itself. So next slide, please. Slide 4, Herantis Pharma. We are a publicly listed drug development company, listed both in Helsinki, Nasdaq First North Helsinki, since 2014, and then since last year, dual listed also in Nasdaq First North Sweden. And compared to many other drug development companies, we hold pride in 2 things in specific. One is our strong roots in science. So our work is truly based on leading scientific research in their fields in the world. And the second is that we aim at significant breakthroughs in our target indications. So we really want to change the way patients live with their diseases in our target indications. And the target indications are Parkinson's disease, where our drug candidate CDNF is in the clinic aiming to stop progression of Parkinson's disease, so aiming at true disease modification, which is the holy grail in neurodegenerative diseases. And then the other target is secondary lymphedema, where our gene therapy Lymfactin is aimed as the first curative treatment, and currently there are no approved drugs for the treatment of lymphedema. So again, this would be a real breakthrough. Both assets are now in clinical studies, in placebo-controlled clinical studies, approaching readouts well within the next year, so a very exciting time for the company. So next slide, please. Slide 5, just providing a summary. So neuroprotective factor CDNF targets stopping the progression of Parkinson's disease. So slide 6, please. Parkinson's disease is the second most common neurodegenerative disease, and it's currently treated with Parkinson's drugs, but unfortunately those drugs only treat the motor symptoms of the disease. They do not stop the disease from progressing. And Parkinson's disease is caused by degeneration of dopaminergic neurons in a specific area of the midbrain. And this degeneration continues despite the medication. So the currently available medication can only help the patient for a period of time, and then the disease progression will unfortunately make those drugs more or less useless. Parkinson's is also a significant societal cost. It was estimated already several years back that if there was a treatment that could stop the progression of the disease, such a treatment would save the societies almost $500,000 per patient in the United States. So when we're talking about disease-modifying treatments and our CDNF, we not only aim at alleviating the human suffering, but we also aim at helping societies manage the costs associated with the disease. Next slide, please. So slide 7, as mentioned, Parkinson's has drugs for its treatment. The current standard of care is still based largely on levodopa, which was discovered at the University of Lund by Professor Arvid Carlsson in the 1950s, or the preclinical work was done by him in the 1950s, which led to the clinical use of CDNF starting in the 1960s. So there hasn't been any essential breakthrough in Parkinson's for over half a century. And this is really where we hope to change the situation with our CDNF. So our CDNF is a natural human factor. It's a natural human protein that we all have in the brain, and it has an important role in neuronal survival. So its role is to help keep our neurons alive. And based on very compelling preclinical data, we have now proceeded to phase 1/2 clinical study with CDNF. The study is mainly funded by a European Union grant, a very highly competed Horizon 2020 grant. And the study is being executed at 3 excellent hospitals. So the University Hospital in Lund, of course, having great roots in Parkinson's therapies. Also Karolinska University Hospital in Stockholm, and then our local Helsinki University Hospital. And next slide, please. So slide 8 summarizes the mechanisms of action of CDNF. And very importantly, this is a multimodal approach. It's not just targeting one single phenomenon of the disease, like alpha-synuclein, which is currently very fashionable target in Parkinson's disease. Yes, CDNF also targets Parkinson's disease, targets alpha-synuclein, but in addition, it works through several mechanisms. And in the interest of time, maybe the most important one to emphasize is indicated by number 1 in this picture, endoplasmic reticulum stress, or ER stress. This is a cell-level phenomenon which is common to neurodegenerative diseases, not just Parkinson's, but also, for instance, Alzheimer's, ALS, and Huntington's disease. And it's a phenomenon in which the neurons start to lose their function. In the case of dopaminergic neurons, they stop producing dopamine, they withdraw their axons, and they start to proceed toward apoptosis, the programmed cell death. And CDNF has been shown to very potently protect cells from ER stress and help them recover from ER stress. Next slide, please. So this was signified first, of course, in several in vivo disease models, not just in Parkinson's disease, but also in other neurodegenerative diseases. And most importantly, as shown in this slide 9, in a primate study where Parkinsonism is due to a so-called MPTP lesion. So just like human Parkinson patients, these MPTP lesion rhesus monkeys have a severe Parkinsonism, which is caused by the loss of dopaminergic neurons. And if you look at the picture on the left, this indicates the severity of the lesion. So the dark staining in this picture shows dopaminergic neurons. And as you can see, almost all of the dark color is gone in this slide. So there's about an 80% loss of dopaminergic neurons. This corresponds to relatively advanced Parkinson's disease. But all of those neurons are not permanently dead. They have just lost their phenotype, their ability to produce dopamine. And when they and we call these undead neurons, we call them Lazarus neurons. So if you look at the picture on the right, after 3 monthly doses of CDNF in these primates, we saw a tremendous restoration in the dopaminergic function. So as you can see, much more dark staining in the picture on the right. And this is the Lazarus neurons that we've been able to recover. We've been able to restore their phenotype. They are again connected to the surrounding neurons. They're again producing dopamine. And of course, if this was repeated in human Parkinson's patients, it would mean not only stopping the disease progression, but even reversing the disease progression. In these animals, this result very nicely correlated with improved gross motor function and fine motor function, and also for the first time in the world, as far as we know, in the non-motor functions. So the animals that were treated with CDNF also had a much less depressive behavior and much greater activity than the untreated animals or the animals treated with a positive control. So, and this is very important because Parkinson's patients say that for them, the non-motor symptoms are actually often even worse for their quality of life than the motor symptoms. And there are no treatments for the non-motor symptoms of Parkinson's. So, based on this, we believe that CDNF can address two of the main unmet needs in Parkinson's: disease modification and also non-motor symptoms in addition to the motor symptoms. Next slide, please. So, CDNF is currently in a randomized placebo-controlled clinical study, and this study has been fully recruited, and the study is broken in 3 parts. There's first, as indicated on this slide with the dark blue, there's a main study which lasts for 6 months, 6 monthly doses of CDNF in Parkinson's patients. And in that part, the patients are randomized in 3 groups: a lower CDNF group, higher CDNF group, and a placebo group. This part of the study was unblinded in last February, and we already announced very exciting biological signals in the CDNF-treated group. But the study still continues, so it's currently in its extension study, another 6 months of CDNF treatment, and during this period also those who initially received placebo are now getting the active CDNF. And next slide, please. Current conclusions from the main study. So initial results after the first 6 months of treatment. Most importantly, this is a first-in-human study, so from a regulatory viewpoint, it's a safety study, and so it was great to see that there are no differences, essentially, between the side effect profiles in the placebo groups and the CDNF groups. So no safety concerns associated with CDNF at this point. But then, very excitingly, we are following these patients with a sophisticated DAT-PET imaging. So it's a surrogate for synaptic density of the dopaminergic neurons. So it's basically a similar surrogate marker as the previous slides showed on the primate study. So a surrogate for seeing the viability of dopaminergic neurons. And in this endpoint, in one of the 2 CDNF dose groups, we saw 60% of patients responding to CDNF treatment. And among those were 2 patients, one had an over 50% increase in the DAT-PET signal, and one had an almost 50% increase in the DAT-PET signal. And naturally, or in the normal patient, average patient, it's known that this signal declines by about 6 to 10% every year. So in the first 6 months, we would have expected to see a 3 to 5% decline roughly in these patients. And instead, we are now seeing a 50% increase. That is very significant. Of course, we should keep in mind that this is a first-in-human study. These are just the initial readouts. So we look forward to the 3rd quarter of this year when we will have readouts from the full 12 months of treatment. But at the same time, we're also encouraged by the fact that these are advanced Parkinson's patients. These are patients with more than 10 years of disease history. We had to start with these, let's say, more challenging patients, definitely not optimal patients for a neurorestorative treatment, but the regulatory authorities always push for starting from this group. But if we jump to next slide, so slide 12, please. We believe that when we hopefully next can start treating earlier stage patients who have much more dopaminergic neurons left, as indicated in these pictures by the declining darker curve. So an untreated patient has a continuous decline in the dopaminergic neurons. In the top right corner, treatment starts at 10 years after symptom onset. So 15 years after the disease has actually begun and CDNF treatment started, we see that we can, we believe we can to some extent increase the amount of dopaminergic neurons. But then if we could start the treatment 5 years after symptom onset, the lower left corner picture, we believe that we could retain the patient at a significantly higher amount of dopaminergic neurons, and thereby a significantly lower level of symptoms of the disease. And this could really, we believe, change the rest of the life of the patient. Slide 13, please. So CDNF is a protein. It doesn't pass the blood-brain barrier, so it has to be administered directly in the brain, as we are doing with a sophisticated medical device, very similar to a deep brain stimulation device, a common treatment in Parkinson's disease. However, we'd of course like to administer CDNF easier. That would also could also enable its application in other neurodegenerative diseases where a medical device approach may not be as suitable. And here we are very excited about the early development of our X-CDNF, the next generation CDNF. These are fragments of CDNF that have the same activity, but that penetrate the blood-brain barrier. So we believe that the next generation could be dosed, for instance, as easily as insulin in type 1 diabetes patients. So a procedure that even a child can do. And this would, of course, be hugely exciting. And this X-CDNF program has already proceeded to lead optimization stage. So we are working our way toward clinical studies also with that. Next slide, please. Slide 14 just summarizes some of the essential comparisons or peers in Parkinson's drug development. There are not too many clinical stage assets with truly disease-modifying potential, and we believe that our CDNF compares very favorably among those, as it is a multimodal approach. So that summarizes CDNF, and in the interest of time, let's move forward with our other clinical stage asset, Lymphactine. Slide 15, as it says, gene therapy for curing secondary lymphedema. So if we move to slide 16, please. Secondary lymphedema is a disease that's caused by some compromise in the lymphatic system. So the system that carries lymph, the liquid, from the body, from tissue. So for instance, as in the picture, breast cancer treatments can damage the lymphatic system so badly that the lymph begins to accumulate in tissue. And in the case of a breast cancer-associated lymphedema, like in the picture here, the accumulation of lymph results in tremendous progressing and permanent swelling of the affected arm. If you imagine what life would be like living with an arm that's continuously swollen like this, you can guess that it's a very painful, disabling disease. It's also a very expensive disease for the societies. Again, it requires lifelong attention, as there are no efficacious treatments for the disease itself, only its symptoms. And next slide, please. Our approach is again very natural. So here we are harnessing another human factor, the human growth factor VEGF-C, which is highly specific for lymph angiogenesis. So it's the mechanism that naturally grows new lymphatic vessels in our body. So as shown in slide 17, if you look at the picture on the top, the green lines here indicate lymphatic vessels. The dotted line indicates a cut or damage across those lymphatic vessels. So when Lymphactine is administered in that damaged area, then you reach the middle picture where new lymphatic capillaries start to sprout in the area, and then eventually the lower picture, those will mature into a functional lymphatic network. So we really aim at reconstituting the lymphatic system to help the body again circulate lymph normally. And next slide, please. So slide 18, where our development has reached a fully recruited phase 2 study where all treatments have already been completed. We're doing this in breast cancer-associated lymphedema, and the study is now in a 12-month blinded follow-up period, which will end at the end of this year. So first quarter next year, we will announce the top-line results. We're also already preparing a phase 3 study, so hoping that the readout from the phase 2 study will be strong. We look forward to launching a phase 3 pivotal study as soon as possible after the readout. And next slide, please. Lymphedema market is definitely a very significant market. It has long been a very underserved market, and still there are very few programs targeting lymphedema in the drug development world. But its awareness has increased very significantly thanks to Hollywood superstar Kathy Bates here in the picture, and thanks to the patient advocacy group Learn, very strong, especially in the US. Kathy Bates herself has breast cancer-associated lymphedema, and he's been a very important and vocal spokesperson for all patients in the world. In the interest of time and hoping to complete in time, even though we were able to start a bit delayed, slide 20, Herantis' outlook remains unaffected by the pandemic. We were very fortunate in the timing of our clinical studies, so there were no essential impacts on the clinical studies of ours from the pandemic. And if we jump to the next slide, please, expected news flow looks very exciting for the relatively near future. So in the third quarter of this year, we'll have the readout from the full 12-month treatment in our Parkinson's study. And in the first quarter next year, we'll have the readout from the phase 2 study with lymphedema. And last but not least, slide 22, please. So as we are moving forward toward later stage development, we also announced relatively recently that we have recruited a new experienced CEO, Dr. Greg Cook, who will join the company in July 2020. And I have promised that I will remain fully committed to the company. This is, of course, a very important development also for me. I've fully been endorsing and even to some extent pushing for this to ensure that the company is led by the best possible person going forward. So I really look forward to helping Greg get started in his new role. I think it's time to wrap up now. So we win back some of the time that's been lost earlier today. But if there's a question or two, I think there might just be time for that. Or Ricard, where are we?
Yes, we'll keep the Q&A session quite brief, but looking at, I took the freedom of opening up the final slide here, and just there might be some investors who are worried about the commercial potential for CDNF given its invasive administration. Could you add some flavor on why you believe there's still considerable commercial potential for this drug candidate? As you see, you have an estimated market potential of 1.6 billion euros in the slide. So could you please elaborate on that?
Sure. I mean, this was, of course, also a concern with deep brain stimulation when that started to emerge in the market. Funnily, no one still knows why deep brain stimulation actually works. So in advanced Parkinson patients, how it actually helps alleviate some of the motor symptoms in those patients when their disease has progressed quite far. And still, it's been a very successful market. So it's become a very significant market. And let's keep in mind that that's not even a disease-modifying treatment. It, again, just helps alleviate symptoms in late-stage Parkinson patients. That has shown that there is tremendous willingness in the Parkinson patients and clinicians to undergo an invasive procedure, even to just alleviate motor symptoms. So we think that this is the strongest signal of willingness of the patients. But of course, we have also heard it from a lot of the patients that, who say that once they've lived with Parkinson's for a couple of years and they understand how it's going to impact the rest of their lives, many of them say that, you can drill any number of holes in my head if you could only stop the disease from progressing. And there's a significant difference between, of course, CDNF and DBS. CDNF could truly stop disease progression if it works as well as we believe.
Excellent. And just as a very brief final question for any investors or potential investors who might not be aware, will you be trying to market these drugs alone, or what's the commercial strategy, just very briefly?
With Infectin, we believe that we could bring this to the market on our own. It's, Wilson Therapeutics showed a great example there, that if you have a kind of a niche therapeutic targeting a specific hospitals, for instance, then that's something that you could take into the market alone, at least in some markets, such as the US. CDNF and Parkinson's disease certainly is a huge undertaking, even for many mid-sized pharma companies. So I think that our smartest option would be to find the right partner at the right time.
Excellent. Thank you very much for your time, Pekka, and we'll move on with our busy schedule. Best of luck going forward.
Thank you, Ricardo.
Thank you. Take care. Bye.
Bye-bye.
Okay, hello everyone. It's time now for Elos Medtech, and we have CEO Jan Wahlström with us here today, who will present the company, and then we will follow with a few questions. And I will leave the word right away to Jan.
Thank you, Oscar. Hello everyone. This is Jan Wahlström, CEO at Elos Medtech. I will talk a bit about Elos Medtech, what company kind of company we are, and on the result on Q1 and a little bit on Corona, of course, in these times. So next slide. So on the agenda, it's a presentation of Elos, the business areas, the offering, and the company's development. So if looking at Elos Medtech, we have sales in our company of about 650 million Swedish crowns, and we have a profitable growth. We've had a very good journey over the last years. 2019 was the best year in the company's history. And over the last 18 months leading up to that, we doubled the profitability actually, and made a lot of great improvements, especially in developing sales, but also in developing operation excellence that helped us provide a good growth. As a company, we've been around for quite some time. If you look at the different localities, we have 5 production sites. They are situated one in US, 1 in China, and then 3 in the Nordic region. Our headquarters is in Gothenburg, Sweden, and then 2 more sites in Sweden and 1 in Denmark. So 5 production sites over 3 continents. So we see ourselves as a truly global player that work in 3 business areas, all of them within medicine technology. We are a contract manufacturing company in MedTech as our main business, but we also have our own products that we develop on our own. We're about 550 employees, and it's mostly in those 5 different sites where we have production. We have a small headquarter with only less than 10 people out of Gothenburg. Everything we do is highly regulated, and it's regulated by especially the regulation called ISO 13485. That regulates MedTech as a field, and we try to stay within that field to 100%. We still have some customers outside that field, but our main business is within that field. Okay, next slide. Next slide talks about from where we come and where we're heading. We have been a supplier, especially manufacturing company, since 1923. Over the time, we've acquired a number of companies, making us more of a medtech company, more focused in that field. And at the same time, we've also improved what we can do for our customers. From manufacturing, we added regulatory, we added development of new products, and then we added to become a solution partner with our customers. So we moved from more or less just production to actually work closely together with our customers. We have quite few customers, and we work really close together with them instead. But with that, I will move over to the business areas. The business areas we have are dental, orthopedics, and life science. Dental is a field that we've been in, I would say, forever. We manufactured what we see as the first dental implant in history in the 70s, together with Professor Brånemark. And we've continued to manufacture implants and different products for implants since then. Orthopedics is also an area we've been in for a long time. It's an area that has become more and more important for us over the last years, especially after we acquired a company in US 2015 that made our position in the orthopedics stronger. Finally, life science is a little bit of a mixed picture of what that means, and I will come back to that later on. But it's an important area for us where we had good growth and good earnings. So if I then move over to the next slide, which is the business area dental. On the picture, you can see different products that we make. We make implants, and the implant, when it comes to dental, is actually a product that you put into the bone in your mouth and then you add a lot of prosthetic products on top of that. Then we make the prosthetics, and we make instruments to put your implants in, and drills and torque wrenches as examples. Torque wrench is actually one of our own products that we've had for 10 years or 15 almost, and it's one of the biggest seller of our own products. But then we have added a lot of products in what we call digital workflow, and you see a few of them down at the bottom of the slide. But if I move over to the next slide, then you can see the own products that we have. It's a lot of products that work in the digital workflow. And if you go to the dentist yourself, what you remember you might chew in this green or brown type of I don't know what you call it, gel, and then you make an imprint, and then there are a lot of different steps before they can actually help you with the implants. What we do is that we help you do this in a digital flow. So instead you take you scan your mouth, you take a picture, and then after that you make a CAD/CAM picture, and then you can make a product that is more suitable for yourself. So that is what we do in our own product range, what we call Elos Accurate. That is an area that we mainly sell to the same customers as we sell our contract manufacturing, so to the big implant companies. But we're really happy that we, over the last year, managed to get one of our customers, Nobel, to actually then put Elos Accurate as a brand that they use themselves towards customers. So that was a big thing for us. And the other big thing that happened last year was that we managed to get the products approved for the US market. We historically have only sold them in Europe. Okay, so if I move over to the next slide. The orthopedics area is when it comes to contract manufacturing, not that different. We still make drills, plates, different kinds of implants. But the biggest thing we have here is that we are really, really good at drills, pins, and wires, things that cut, pierce bone in the body. And they are mainly used in the area of trauma, but they're also in some ways used in elective surgery, which is, of course, quite important now in Corona times, because trauma, that represents 75% of what we do, is not affected as much as the elective surgery is. This is something we do both in US, in Sweden, and in China. And if we then move over to the last business area, the life science. This is the more mixed picture of areas where we make products for diagnostics, hearing device, vibration, and other medical areas. Typical things are injection pens for diabetes treatment that we have worked in for I don't know how many years. And it's also components for the bone-anchored hearing device. That is also something that we worked in a long time, a lot thanks to the connection we have in Gothenburg to the research in that area. And then components for pacemakers that we've done for quite some time. But we also have a lot of different products, as you can see on the left-hand side. There are a lot of small fittings and stuff like that goes into laboratory instruments. So how does our market actually look like? So what is the competitive environment? So if you take the next slide, you will see the competitive environment. And our one competitor we have is, of course, insourcing, that companies actually choose to do it themselves. But when they decide to outsource, there is a number of companies that we compete with. Maybe you haven't heard of companies like Jabil and Orchid and so on, but they are big competitors in our field. Nolato, of course, works as a contract manufacturing as well. And then in our own product range, we compete with a number of small companies you probably never heard about. So if I then move over to the next slide, now I'm going to move into the area of talking about what we can add to our customers. And if you go to the next slide again, then what we are strong at, we are strong at manufacturing metal and plastics. We are strong at adding things like logistic solution, development solutions, and the entire processes to our customers. And then we have a very strong quality fundament. We are really strong in the regulatory and quality side. So what does that give to our customer? It gives them faster time to market, shorter lead time, first-class quality, what we like to see as good as their own, and increased efficiency. So that is the offering that where we become a solution partner to our customers. Okay, next. And next. So the long-term financial and sustainability goal that we have for 2019 was to have a long-term organic growth of 10%. We've had a very good development, I would say, on both the long-term organic growth. Even if we didn't meet the goal for 2019, it's been good over the last 3-4 years. Long, sustainable growth for us. But what we were really happy about last year was that we managed to get the profitability to go up. The target we have is 13% on EBIT, which is a tough target, but we moved from the 6-7% up to maybe 9% range, which we are really happy about. And as I said, 2019 was the best year ever for us, and it was we've doubled the profitability in the last 18 months. So, next. If we then go into 2020, the first quarter, First quarter was, I would say, in line with, I think, expectations. We managed to get to a sale of 159 million, close to what we had in the last 2 quarters of 2019. It's lower than we had in Q1 last year, but for those of you following us, you know that was a special quarter for us because we ended a collaboration with the customer and sold off a big inventory in the first quarter last year. Profitability-wise, we reached 11.9 million, which was a little bit lower than the last 2 quarters, but it was affected by a one-time cost of 3 million. So if we add that, it's 14.9 million from the operations, and that is well in line with the last 3-4 quarters. So I would say we have a stable environment until Q1, even though we were affected in some pieces by Corona at the end of the quarter. So if we move over to the next slide, this is just a little bit more numbers instead of looking at it in graphs. And there you can see the 11.9. If you add the 3 million that I talked about on the profitability actually becomes 9.4%, which is for us a very strong number. So we managed to keep the profitability in Q1 despite the Corona affecting us already then. So if I go into the next slide, comment on Q1 when it comes to that, the main events we had in Q1 is that we had to close our Chinese site for 21 days due to COVID-19. And I'm really proud and really happy about the fact that we managed to keep productivity up and we managed to deliver to our customers despite that. After that, we have opened up the site in China, and they are running full speed, and it's going really well over there for us. But after that, of course, as you know, Corona has moved over to Europe and US. So we have had short-term furlough in various degrees in our 2 of our Nordic sites, and they are the ones that mainly work with dental products, because that is the field that we have been mostly affected in. Our site in Skara that works with polymers is running 100%, or actually you could say almost more than that, because we got a lot of work on ventilators that has improved the work that we get. But you could say they work at 100%, China work at 100%, and US at 100%, and the 2 in Nordic are still in furlough for us. So the average number of employees has gone down a little bit to 555 from 578 already. So if I then go into the next slide of life science, as I mentioned, we have a very high level of the polymer business of what we do. We have previously started to build an extension to our facility in Skara, and that is going according to plan. We continue with that building, and we have seen, as I said, an increased demand for the ventilators that we do together with Getinge, and we wrote a special article about that part, and that is something that we're really happy and proud of, that we can contribute to these kind of products in these difficult times. If I then move over to the next slide, dental. Sales was fantastic in dental in first quarter. But that's where we see the biggest impact in Corona, as we mentioned before. The growth we had was 8%, and it was driven by our contract manufacturing customers, but was also driven by the fact that we actually sold more own products than we've done before. It was actually a higher percentage of our sales going to own products for the first quarter. It was above our target of it was 14%, so it was higher than we had before. And as we now have the complete offering approved in the US, we have a possibility to, as soon as it starts up again, to be able to sell these products to that market in a bigger extent than before. If I then move over to the next area, orthopedics. On the picture, you can see the expansion that we did that was finished last year. So that is to be able to expand our business in US, doubling the production capacity in that site. We have seen quite a number of new inquiries, but we also have customers that postpone different launches. So it's a little bit of a mixed picture in orthopedics. there is, you can see if you read in the market that especially the elective surgery has been postponed in many places, but also that actually fewer people need trauma treatment because they are sitting at home in a bigger extent than they usually do. We have invested quite a lot in this area over the last year, and we're looking forward to be able to utilize that when things go back a little bit to normal. So if I take the next slide on our assessment of COVID-19, our main focus in this situation is actually to protect our employees, to make sure that we can keep them healthy and we can keep them help them if they do get sick, so that they can get quarantined. That is, of course, to make sure that they are all well, and it's also a way for us to be able to keep our manufacturing open by supporting that. Then, of course, it is to deliver medical device products to the market in a good way, and then to minimize the risk by making sure that we don't invest more than necessary right now, and make sure to keep focus on costs, and so that we can come out strong after when the growth comes back again. So if we then move 2 slides ahead, how much time do I have, Oscar? Okay, so our long-term strategy is still the same as we've had before: to build a leading group in the medical device market, to grow faster than the market, and to strengthen our offering by being really good at what we do. If you look at the next slide for 2020, we have the same strategy as before. We believe our market will come out strong after the virus is gone. We will focus on profitability growth in the long term. Right now, we focus also on operation excellence, and we will continue to do that to get more and more efficiency out of our production, and continue to work with complete performance, to work closer and closer together with our key customers. And the next slide, the biggest areas we see growth in is within high-tech polymer products within diagnostics, where we've had growth over the last years, and we invest again. Robosurgery in orthopedics, an area that we've had great success over the last years, and we believe that we will continue over the years to come, and within our own products in Elos Accurate. And then next slide, I believe that we are well positioned for continued growth. We have a global presence, we have first-class quality, and we work close together with our customers, and we build close partnership with them. And with that, I move over to the last slide with our vision, transforming medical technology and advancing quality of life worldwide. And with that, I say thank you.
Okay, thank you so much, Jan. We have time for a couple of questions here. I think to start off, obviously very, very nice developments in terms of margins for the business over the last couple of quarters here. Could you just give some more concrete example of what you've actually been doing in regards to operational excellence, and perhaps how you're going to go from here to the 13% target that you have?
Absolutely. What we've done in operational excellence is that we actually created a toolbox of different tools how operation can be done in a more efficient way. We've actually put a person, Conny Jakobsson, the person running our Chinese operation, to be responsible for this. And then we go to the different sites and we map out what processes they can improve best, and then we work on that continuously to improve the ones that give the best result. At the same time, we have looked at products coming in, what site do they actually fit best into, so we can get longer production of the same family, to reduce the setup time and get the production to flow more efficient. So when a new customer comes in, instead of saying that you have to go to this site because you worked with them before, we can say that if you go to that site instead, you can get better efficiency and better price, and then we can also get better profitability and better efficiency. So that's more or less what we've done in the operation excellence field.
Yeah, and in terms of I think now you have own products. Last time here was 14% of group sales. With this sort of mix, could you reach the 13%, or do you need to increase the portion of proprietary products that you're selling?
Okay. Yeah. So the other part, I think that we can I think we can reach the profitability target that we have by continuing work with operational excellence, and of course we want to increase the part of our own products to be even higher. But I believe that we can get up to that profitability also in our say pure contract manufacturing part by working on the operation excellence. But we then need to get more into the automation side and work a little bit more on that than maybe we've done in the past. So it is a journey. I think that we have taken great steps over the last 2-3 years, and all the numbers on our KPIs are pointing in a good direction. So I'm optimistic that we can continue that journey.
Yeah. And just a quick question on dental. So obviously the US market is opening up. I think it accounts for somewhere around 35% of global dental implants. What about digital dentistry in relation to that? How big is that of the total implant industry? And perhaps you could develop a bit more on the competitive landscape for digital dentistry.
Yes, I would say digital dentistry can mean a lot of different things in the market, but it represents a small portion, I would say, in the total market. I don't have any exact numbers, but if you would make me guess, somewhere in the range of 10%, that is digital dentistry today. I believe that this halt that a lot of dentists have needed to do during this situation has made that they have been going to a lot of trainings, and they've had a chance to improve, get to know more about the new technology. So I would both hope and believe that digital dentistry will have a chance to grow faster than the market, also continue coming back from the corona. And that so for us, I think it's not a good situation that anyone is in this one, but I think it is positive that they have a chance to actually go to training, and a lot of the big implant companies have done great work in that area to have a lot of training sessions to dentists when they can't take care of patients.
Yeah, and just one final quick question. You're mentioning briefly there, acquisitions. Could you develop a bit on, what do you have a clear idea of what kind of companies you want to acquire? Would they add new, expertise, or would it be more complementary, or how what's the strategy there?
Well, as you mentioned, we have that as a complement to organic growth with acquisitions, and we are mainly looking for acquisitions that add technology and add areas within orthopedic, dental, and life science within the fields we are that are contract manufacturing companies. Predominantly, but that work with different technologies, so that we can go to our customers and help them with more processes and be a bigger partner together with our main customers. That's the kind of targets that we're looking at.
Yeah, I understand, and thank you so much. I think with that we will round off here. Thank you for joining us and taking your time to present your company.
Thanks a lot. Thank you, Oscar, and thank you all.
Welcome to this presentation of BHG. My name is Fredrik Iverson, equity analyst at ABG, and together with us today we have Adam Schatz, CEO, and Jesper Flemme, CFO, who will give a 20-minute presentation of their company. So with that, I'll leave the floor to you guys. Please go ahead.
Thank you, Fredrik. It's a pleasure to get this opportunity to present some recent developments. If we move to slide 2, please. My name is Adam, and I'm joined by our CFO, Jesper, who's just here with me in the room. And if we move to the table of contents on slide 3, Fredrik, please. The way we will play this is I will kick the session off by providing a brief overview of BHG, after which I'll cover some of the highlights of the first quarter. Jesper will then provide some more details on the first quarter before handing it back to me to summarize. We will then end the session with the Q&A. Slide 4, please. So starting off with an overview of who we are, our current position, and key strategies. Slide 5, please. Some quick facts about BHG. We're listed on Nasdaq Mid-Cap and have a market cap of approximately 8 billion SEK. We are the largest listed consumer e-commerce company in the Nordics, with a combined market share in home improvement approaching 30%, which makes us the largest European pure-play online retailer within home improvement. And another key aspect of our business model is that we have some 50% of net sales, which is derived from our own brands or our own private labels. Then the bubbles lower down show that our financial history bears out the strength of our model. We have enjoyed a 34% net sales CAGR over the past 3 years, with leading profitability and cash flow generation along the way, and a return on capital employed, excluding goodwill, of some 20% as a result of our asset-light growth model. We thus combine the two hallmarks of what we believe is a sustainably profitable e-commerce company, namely dominating our chosen areas and having a significant share of net sales coming from our own brands. Slide 6, please. We operate in a very large market. The home improvement market in the Nordics is the third largest consumer category, worth some 230 billion SEK, and trailing only food and fashion in terms of size. At the same time, the online penetration of this market is still relatively low at 8% or so, and the market analysts are convinced that online penetration will continue increasing rapidly over the medium term and ultimately level off at around 30%, which is roughly the same level as consumer electronics today. Forecasted growth is expected to be some 15% per annum for the foreseeable future. So finally then, with an online penetration south of 10%, the online market for home improvement is worth almost 20 billion SEK today, and a 15% per annum growth will mean a doubling of the market in 5 years. We've historically grown considerably faster than the market, but assuming that we grow with the market, this would mean that we would double our net sales from 2018, when we set our midterm financial targets of 5 billion SEK to our target in the medium term of 10 billion SEK. And as you will see, we are well on our way to reaching that target. Moving on to slide 7, please. Our strategy remains focused on 4 cornerstones. Firstly, a continued expansion of our already leading product range. Our portfolio has now grown to include over 800,000 unique products. Secondly, scale and a high share of own brands in our sales mix. With a strong growth in the quarter, we continued building scale advantages, and as we just saw, a significant share of net sales and the growth also came from our own brands. Thirdly, creating the most appealing shopping experience and dominating all things digital. We grew our digital footprint significantly in the quarter and saw some 57 million visits to our destinations, meaning well in excess of 200 million visits on an annualized basis. And finally, offering the market's best professional guidance, service, and support, including our own installation network, as well as our own last mile delivery on the home furnishing side, which continued expanding its coverage during the quarter. So these 4 key pillars comprise what we call the BHG ecosystem. Moving on to slide 8 and launching into the key highlights of the first quarter. Slide 9, please, Fredrik. We recorded the highest net sales, the highest EBIT, and the highest EBIT margin and cash generation for first quarter to date. Net sales came in at 1.6 billion SEK, corresponding to total growth in excess of 33% and organic growth of 22%. We recorded an adjusted EBIT of 80 million SEK, translating to an adjusted EBIT margin of 4.9%, and finally delivered the strongest Q1 cash flow from operating activities to date, amounting to 148 million SEK. We thus strengthened our position as the #1 online retailer in the European home improvement space. Next slide 10, please. One aspect that we were particularly pleased with during the first quarter was that organic growth continued accelerating. We've now enjoyed 4 consecutive quarter-on-quarter increases. The 22% number at group level for the quarter was comprised of an organic growth of almost 28% in the home furnishing segment and 18% in the DIY segment, with a market acceleration towards the end of the quarter. Now, of course, we have to comment on the pandemic and the crisis that the world is facing. And as we realized the gravity of the situation and what was an epidemic turning into a pandemic, we focused on 4 things. Firstly, the first one was protecting our people, and the second was protecting our supply chain. We then made sure that we could secure the demand picture, and finally, likewise, could secure the financial position. And very briefly on each of these parameters, starting with people, we took a number of measures which were tailored to the specificities of each of our sites, whether offices or warehouses, with the primary objective of ensuring safety for our colleagues and the secondary objective of securing business continuity. And these measures have allowed us to stay fully operational throughout all our geographies and sites, providing a safe work environment for our colleagues and a continued high service level to our customers. Moving on to supply, we took steps very quickly to secure product availability. These steps included staying in close contact with our suppliers, as well as selectively increasing inventory and securing alternative sourcing wherever possible. Furthermore, the breadth of our portfolio, among other things, secures that there is almost always a substitute product that we can offer our customers in the case of shortages. Next, demand. We didn't see any negative short-term impact on our business in the first quarter, actually quite the contrary. Nor have we done so in the start of the second, as consumers in our markets have continued investing in their homes, particularly through the online channel that we dominate. We also believe that online retail in general, and our categories in particular, are well placed in a world in which the nesting or cocooning trends, hemester, leads to a higher interest in and budget for home improvement projects. The underlying shift from offline to online continues, and I believe will accelerate as more and more customers experience the benefits of shopping online. And finally, cash. Cash is always king, and our already strong financial position from the end of 2019 was further solidified in the quarter on the back of an excellent cash flow and with continued strong support from our financial partners. We have now also entered into what is the high season for us, and quarter 2 is always seasonally the strongest quarter from a cash generation perspective. So in all these ways, we feel that our house is fully in order. And with that, we move on to slide 12, and I'll hand it over to Jesper.
Just moving on to slide 13. We are very pleased with our performance in the quarter, and not least the fact that we saw a 4th consecutive quarter of accelerating organic growth. As Adam mentioned, net sales increased 33.5% to reach 1.628 million SEK, and organic growth reached 22.1%. The top line development, coupled with gross margin improvements and discipline on the SG&A line, resulted in the highest first quarter EBIT and EBIT margin to date. EBIT grew by 44.7% in the quarter to reach 80 million SEK. Key factors contributing to the strong EBIT included: 1. Operating leverage as a result of strong growth and disciplined SG&A. 2. The private label share of sales in the do-it-yourself segment. And 3. Strong operational focus in both segments on curation and purchasing to optimize unit economics. Next slide. we again enjoyed a quarter which saw a leveraged P&L, the significant top-line growth at 33.5% translated into an even higher gross margin increase at 40%, and a further boosted EBIT increase at 44.7%. The strong performance in both segments contributed to lifting the gross margin by 1.2 percentage points to reach 25.8%, our highest gross margin to date. The pure product margin, which is the measure most commonly used by our listed peers, amounted to 37.6%. As you can see on the right-hand side of the slide, the improved gross margin trajectory from 2018 and 2019 continued also into this year. The main drivers for the gross margin improvement included roughly equal contributions from the two segments. Due to Self, primarily driven by higher share of sales from our own brands, and Home Furnishing, primarily driven by continued scale improvements and inventory management, translating to lower fulfillment and postage costs in relation to sales. Next slide, please. The group's net debt amounted to 499.6 million SEK at the end of the quarter. Our strong operating performance meant that net debt in relation to LTM adjusted EBITDA ended at 1.3 times, an outperformance of the medium-term financial target range. Our financial position remains solid. The cash flow from operations reflects a strong business model, on top of which we had unutilized credit facilities at the end of the quarter of 529 million. Back to you, Adam.
Thank you, Jesper. So we'll move on to slide 16 and then quickly to slide 17. Summarizing, we are the clear online market leader in the home improvement playing field. We have a history of strong growth coupled with profitability and cash flow generation. And we're off to a very strong start to 2020 with our house fully in order, with accelerating growth, with strong gross as well as operating margins, including as a result of the continued increase in the share of sales coming from our own brands. As Jesper just showed, we have a very strong financial position, even before the second quarter again, which is the strongest quarter from a cash generation perspective seasonally. We have further expanded our ecosystem, the BHG ecosystem, through continued rollout of our own last mile deliveries and also the installation footprint. And finally, we are firmly on course to reach our midterm financial targets, which including us becoming a 10 billion SEK net sales company. With that, Fredrik, over to you and questions. Thank you.
Thank you. Yes, we've got some time for a few questions, starting with M&A, and you didn't speak a whole lot about it, but you clearly have a very acquisition-driven agenda, and it would be interesting to hear you talk a little bit about the development you see in your targets as they join your platform.
Sure. So just by way of background, we've made a very large number of acquisitions since 2012, approaching 30 acquisitions. We had a particularly active M&A year in 2019, in which we closed 6 acquisitions. And we started this year by acquiring one company, Hemfint, in February. So we have this history, and with the history of having made these many acquisitions, we also have tried and tested a methodology for making sure that we get the best bang for our investment buck also when it comes to M&A. And the strategy includes, of course, buying companies that in various ways support our 4 strategy pillars that we briefly covered in one of the slides here, slide 7 in the presentation. So, buying companies that makes good strategic sense is where it starts. But we're also very focused on ensuring that the companies that join us and form part of BHG going forward also have very strong management teams and very strong entrepreneurs. And one of the things that makes us attractive as an acquirer is that we can offer these typically outstanding entrepreneurs the opportunity to continue being the leaders of quote-unquote their business, because that's how we operate. We have a decentralized model that really rests on the drive of the people who are closest to the operations and to our customers. So they can continue being entrepreneurs while enjoying the benefits of being part of a much larger company, which includes then us opening up our larger platforms to the product assortment of these smaller companies. So we dramatically increase the shopping windows, if you will, to these acquired companies. And we also, with the scale we have, we can roll out our typically much better supplier terms to those acquired businesses. And then we also have, we think, expertise that is second to none when it comes to all things digital. And that's also an early area in which we make sure that we reap the synergies, rolling out our best practice digital approaches to those acquired companies. And one of the focus areas of our recent acquisitions, in addition to the fact that we want them to support one of our pillars and the acquired companies, including strong management teams, has been to further boost our private label or own brand offering. And that's one reason why we have now, actually quicker than we envisaged, reached a point where, as I mentioned, roughly half of our net sales comes from private labels or our own brands.
Yes, thank you, Adam. Very clear. And to follow up on that last part, you're mentioning white label quite a few times in your presentation. Why is this an important focus area for you?
It's an important focus area because we believe that having this mix of well-known external brands and our own private labels or strong own brands is optimal. There is a difference in the economics for external brands and for our own brands, which includes higher margins for our own brands. And that's quite natural because price transparency, of course, in our own offering is lower than it is for well-known external brands. But having said that, we don't envisage us moving in a direction where, all of our sales would be based on our own brands, because there's also a great benefit in having such an attractive and by far the widest portfolio of well-known external brands, because that gives us huge advantages when it comes to traffic generation. And that's one reason why we can have marketing costs in relation to net sales that are so attractive compared to, I would say, almost any other e-commerce company globally, where we spend just north of 5% of sales in marketing, and that's a very, very low number compared to other e-commerce players. So it really is the mix that we're striving for. And with the scale that we've achieved, we now have the opportunity and the capability to introduce a higher share of sales coming from our own brands with the margin benefits that gives us on the P&L.
Also very clear. Thanks, Adam. And a question on your distribution model. You've been taking more and more control over your last mile deliveries lately. And why is that? And have that sort of affected your profitability in any way?
That's a very good question. And I don't have a very snappy answer for it. We have to discuss this from the point of view of the two segments, because we approach it quite differently. Within DIY first, we work with external partners in terms of both in-freight and out-freight, last mile to customers. And we have some very strong partnerships there where we can jointly develop the logistics offering so that we improve the service levels, the tightness of the delivery times and delivery slots and whatnot. Also, we're working on developing a consolidated shipment offering together with one of our key external freight forwarding partners. So within DIY, that's how we're approaching this. But you're right, in the home furnishing segment, we have one part of the business, which is the very rapidly growing Eastern European business, which is fully based on, it's integrated in the business model really, on us having last mile deliveries throughout the many countries in Eastern Europe that we serve. We really offer a premium service to consumers there. So all of Eastern Europe is covered through our own last mile setup. In the Nordics, we started with the Stockholm area in late 2018. And the reason we did that was actually manifold. One was that we felt that we didn't have a good enough negotiating position to the external freight forwarding parties who could suddenly increase prices, for instance, and there was little we could do. So we wanted an alternative. But we also felt that this is a key aspect of customer satisfaction, and we wanted to see whether we could drive customer satisfaction levels up by controlling this. And ultimately also, when we control it, it gives us the freedom to layer in additional services. As I mentioned, for instance, delivery windows that are very narrow, or evening deliveries, or weekend deliveries, or carry up and carry away services and the like, which then is fully in our hands to develop that service offering. And we didn't initially start testing this with a view to getting costs down. But the fact is that now, as we have reached the critical mass in Stockholm and in Gothenburg as well, and we've just rolled out in Skåne, southern Sweden, we see that we are actually fully competitive from a pure cost aspect with our external partners in the area where we've chosen to roll it out. So where we've chosen to roll it out is the obvious areas where we can gain the critical mass and the scale, which is the densely populated areas. And what we've then found, in addition to being cost competitive, is that we really have customer satisfaction levels that are markedly higher where we deliver ourselves to end customers. So it also works well from that perspective. So the conclusions from our side is we've gone beyond testing to structured rollout. Southern Sweden is new to us now, and we'll continue rolling out in the other more densely populated areas of Sweden before we then likely move into the capital areas of Helsinki and Oslo as a next step.
That sounds very reassuring. So with that, thank you, Adam and Jesper, for this presentation, and best of luck on your journey towards the 10 billion.
Thank you.
Welcome back, everyone. We experienced some technical problems, but hope to be back now. My name is Stefan Knutsson, and I'm an equity research analyst following the service sector here at ABG. The next company we have on the agenda is the engineering consultancy company Eurocon. And with me today I have their CEO, Peter Johansson. Welcome.
Thank you very much. I would like to present Eurocon then, and I think we can start with the picture that you see right now. Eurocon is having some other companies like PW, Quality and SiteBase, and we are using them. There is also technical consultant. SiteBase is a tool that we use in all these companies to be efficient. Next. We have a goal. The goal is to increase the turnover 10% per year, which is quite high when you have Corona and a recession on the market. The exception shall be to will maintain profitability all the time, and that's the biggest problem. But we also have some problem with the turnover for the moment, but we are working on that. Mission. We would like to be a technical, we have a good technical know-how, we have a long experience, activities and participation in several projects during a couple of years, and we will still continue with that. And we have a good platform to work together with the customers and work very close to the customers. And it's also a very good solution to employ people when we have this very good experience and a long experience. The vision is to obtain the choice of we should be the best company that the customer can hire in, employees, and to build up, obtain and sustainability future. That's a very important thing for us to recruit new members in the company and make sure that the customers are satisfied with the time schedules and the quality that they get. Go to next then. You can see here, this is the turnover. I'm sorry that you don't have it in English, but the turnover is split in several areas. And we see that the pulp and paper forest industry is one of the biggest, of course. It varies from 50 to 45, 44% as it was 2019. The other thing is the mining industry, and we also have some IT, infrastructure, and chemistry, and energy, of course, as you can see. Next. Personnel and turnover. We can see that we have a quite good experience of increasing the personnel and the turnover. It has been a little bit lower during a recession, especially on the industry, on mining and on the pulp and paper business last year. But we think it's on its way back. So we are hoping that when we get rid of this Corona and after summer, we probably can start to recruit and get things going up in a faster way than it's going for the moment. Next. In the projects, we are working from everything from pre-studies to analysis during the pre-study, and then of course we can make sure that we do a whole project also with detail engineering. We have a checkout, optimization, and then the mill will be running, and then we do a new analyze and make sure that it's working as it should be during the pre-study. So that's the main thing. And to do that, we use our own tools, SiteBase. Next. We are working very close with more research and Processum, which is owned by RISE today, which we are working more or less in several projects, especially on the research and to get new things on the market. That's very important for us to make sure that we can do that. And it's also make sure that our employees will see that we have a sustainability future for the company. Next. And we go to some interim report, January to March, which we can see that we have decreased the net income, the turnover, and which is not so good, but we have seen a recession now during the corona pandemic here, which is a problem, but we are working with that. So today we have around 5 to 10% of our employees, it's more or less going home about 50% of the time. But we hope and we see that it's a good opportunity to make sure that it will increase again after summer holidays. The EBIT is around 3.5, which is quite low, but we are still working with that as well. And the margin is 5.1, and that should be up to 10. And we are hoping that we can increase that during the last half year here in Sweden. Yeah, we take next then. Then I would like to show you some of our references. LKAB, it's a quite big company up in the northern part of Sweden, which we are working quite high. We have an office there. We are the biggest technical consultant company in Kiruna, and we are working very close to LKAB. Next. We have done some local services also for buildings and facilities for the big market here on the infrastructure side. The World Trade Center in Växjö, for instance, that's a smaller part of our business. It's around 10% of the total turnover. The biggest one next is, of course, the pulp and paper industry. And this is the biggest investment we're talking about, SCA Graphic Östrand, which did a project 1.5 years ago, was it ended. And then we have worked with that 3.5 years, and it's a quite good experience, and it's a very good mill up running full speed today. Next. We also do some work outside the country, of course. We are working in Canada with some partners. We are working in several other areas, also in Germany. And we have been in Indonesia and been doing some work there, optimization mostly. And also pre-studies during the process side on all the pulp and paper industry. We can take next then. Yes, this is the final picture I have. We would like to increase our compatibility together to be efficient and smart technology solutions. Sustainability is a very good working site for us. We create long-term benefits for the industry and other customers in Sweden and in other countries also, but mostly in Sweden. And the biggest target we have is, of course, the pulp and paper industry, but we are also working in infrastructure and also mining and all the other industries, as you can see on the split up we had on the previous slide. Yes, Martin.
Okay. Thank you, Peter, for the presentation of Eurocon. I do have some follow-up questions to you. First up, you do not mention the COVID-19 impact that much. Shall we interpret that as it has been rather small on your business?
Oh, we have seen it in the first 3 months as well here. It started in the middle of the quarter. So we have seen quite the smaller business and the bigger business that they are postponing all the big decisions and such things and waiting to see what's going to happen. And we can see that we are on the right spot now, and Sweden mainly we are looking at, and then we can see that the pandemic is going, the people going into hospitals and such things is going the right way now. And we can see also when we talk to the customers that they are preparing for some new investments, and they are saying that, okay, we're probably going to have a solution and a decision made in the boards during August, September. So we are hoping that that will be a good solution and it will work out.
And if we look a bit into Q2, how do you think it will impact you in that quarter and for the rest of 2020?
Yes, as I said, I think the second quarter here is going to be more like the first quarter. So it's going to be a little bit lower turnover, and the margin is going to be 45% somewhere. But it's still happening very lot for the moment, so we don't know really yet. But we are hoping that we can increase both the turnover and the margin during the second half of the year.
And you also mentioned that you have some personnel on the short-term layoffs. Are you able to utilize any other government support packages that has been launched in Sweden?
Yes, there is some taxation and such things which we can take part of. But of course we are trying to get all our personnel back as quickly as possible, because that's the turnover, and we need the turnover to get the margin. Okay. So it's very important for us to get in some new projects.
Yes, and if we look on the liquidity situation, you ended Q1 with a cash position of around 8 million. What is your view on the current liquidity in the company?
Yeah, we are increasing the liquidity all the time, and we haven't any credits on the bank today, which means that we are in a quite good position for the future as well. So we don't see any problem with that. We have a discussion with the bank that we can get a loan in a very short time if we should be needing it. But we see that we are filling up on the liquidity, and I don't see any problem today.
Okay, perfect. And then looking a bit more long term, a standing problem for engineering consultancy firms is the lack of qualified engineers. How do you work with the recruiting in such an environment?
Yes, we are working very much with schools, and I mean technical high schools and universities. We are supporting them in all the areas that we are working in, all the towns around Sweden, and we are trying to hire in them. The thing is that we have to show up, and we have to make sure that the students knows about us, and we are doing a very good job on that area. And I think we have seen now that it's easier to hire in personnel today, of course, because it's harder for them to get job. So it's going to be a new rush, I think, in August on that side, as we can see today.
Yes, and you have a relatively large amount of your business in the northern part of Sweden. Do you think the situation is better up there, or is it similar to the middle part of Sweden in terms of shortage?
It's similar. We can see that there is a small difference during Sweden, but we see that it's more or less the same. The corona pandemic is taking a lot of business out of the market for the moment, but it will be coming back. I mean, all Europe is going to open up, and that's also not naturally a market that we are very much interested to come up again, because all our industry are exporting to all the world, so we need to get the market up running again. But we see that it's an opportunity here in end of this quarter and beginning of next quarter.
And if we look a bit more long term, I've seen some prognosis that the shortage of engineers is just getting worse. Is that your feeling as well?
Yeah, for the moment we are working hard to make sure that we are cleaning up a little bit with the engineers, which sites are not working and such things. But we are back on track, so we're going to take in some more personnel starting in August, I think.
Okay, perfect. And then if we look a bit more on the outlook for the rest of 2020, I suppose you are dependent on how the demand will return from the big forest and industrial companies. How is the situation as you feel it right now?
I think it's my stomach feeling is that the pulp and paper business are doing quite good for the moment. They are a little bit afraid about the pandemic, of course, but I think that we're going to see some decision in some boards around the Swedish mills at least. And if you look at the mining industry, they are still working as before. They haven't done anything to increase to decrease their business. So we are quite optimistic for the next half year.
Okay, perfect. And then a bit more on a strategic question on M&A. You've done some M&A the last couple of years, but during 2019 you had some problems with the integration of KLT, for example. Is that behind us now? Are you more satisfied with how you have integrated the business parts now?
Yeah, we have worked very hard with that, which is also not naturally costing some money, but we are not 100% finished, but I can say that we are about 95% finished after the half year, yeah.
Okay, good. And how do you view the current M&A landscape in this current market? Is it on pause for the moment, or are you able to have discussions in this time as well?
Yes, we have continuous discussion with companies and such things. So we are still interested to get some more company into our company. So we are looking, but there is a little bit slower on the moment, not from our side, but from the other side, I think.
And if you would say...
But we are still open for it.
And if you would choose between organic growth or growth through acquisitions in the coming year, what do you feel more confident about?
We're going to work very hard with both of them. So we are hopefully increasing the market, especially on the pulp and paper industry, but also on the infrastructure side. And we can see that if we make a good session on the infrastructure side, that will increase our turnover and our personnel as well. So we are trying to make sure that we increase all the other than pulp and paper also, which is very important for us. It's hard from the beginning, but you have to make a stand that you are there and you can show the customers that we are a trustworthy partner.
Okay, perfect. And then, Peter, to sum up this Q&A session, I would like to ask you what your top 3 priorities will be in the end of this year.
It will, of course, will be the margin on our turnover. That's very important for us, but also sustainability. We are working very hard with that, and to get even maybe 1 or 2 more customers on the pulp and paper side to come in as partners that we work very close with. We have, for instance, Södra we work very hard with SCA we work very hard with, and there is more company, hopefully, on their way that they can see that they have benefits to work with us.
Okay. Thank you very much, Peter, for taking time to present with us here today. I would like to, or you have to go back now to your operational tasks, but good having you here.
Thank you.
good afternoon, and welcome back to Introduce Investor Days. My name is Jesper Birch Jensen. I work as an analyst here at ABG, and up next we have Flexion Mobile, where we have the company's CFO Niklas Korosar here with us today, who's going to present the company. So with that said, please go ahead, Niklas.
Thanks a lot. I'm the CFO in Flexion Mobile, Niklas Korosar, and as you can see, I'm presenting from home, where I've been sitting for the last 11 weeks in this lockdown we have here in London. So it's actually very nice to actually meet some people, even though it's on a virtual basis. First, I want to mention this terrible COVID on what the corporate effect has been on Flexion. We already had a remote access policy in the company before this pandemic hit us. So we could shift to a virtual, from working from home policy basically overnight without any disruption. So the whole workforce has been working full steam ahead. The market has also been picking up. So if anything, we've seen a positive effect from this. So for us, it's really, we consider ourselves one of the lucky ones here in this terrible crisis we have at the moment. So if you go to the next slide, we see that Flexion Mobile is the leading distribution platform for mobile games on the alternative Android market. So that means that we go to third-party game developers and secure the distribution rights for these games onto the stores, which we're working very closely with. So we work with stores like Amazon, Samsung, One Store, Huawei, where we then distribute these games. We were founded in 2007. We're London-based with 50 staff. We went to the market 2 years ago to First North in Stockholm, and we have a run rate of about £10 million on an annualized basis, about 120 million kronor. Next slide. So it's the market slide now. So we are, as I mentioned, active on the mobile gaming market. It's an absolutely massive market. It's $17 billion. And I actually saw that this slide is actually a bit old. It should be updated. It was $70 billion. It's now $90 billion, which is the forecast for 2020. So there's a lot of growth on the market. It's a huge size. In terms of where we're active, we don't focus on Apple. So we focus on the Android market. That is our addressable market. That's what we technically can do. On that market, we don't work with Google, and we don't work with on the Chinese market. So we focus on the alternative market. That's our go-to-market strategy, and that's the market we want to take. So next slide. So why does Flexion exist? Basically, a game developer writes one game file for Google and one for Apple, and everyone does the same. So in these two stores, there are 4 million apps in each store, so they're heavily overcrowded as stores. So the only way a developer can be seen is to spend a lot of money on advertising and user acquisition. So next slide. At the same time, it's very hard for them to reach out to new stores because the games has become so complicated that you need one new distribution pipe for each new opportunity. At the same time as it's very hard to judge how big the revenue opportunity are in these stores. So most developers stick to their 2 existing stores. So next slide. So here we have a market problem which Flexion solved by integrating these alternative stores into a distribution platform. So what we can tell a developer is, you're good at Google, you're good at Apple, so great, you do that, and we take care about the rest of the distribution. So next slide. We do this through a full service offer, and it's a unique offer that no one else can offer in the market. So basically, we get the game file that the game developer writes for Android, which is for Google Play. And that's the file that you as an end consumer download if you buy an app. So we get that file, then we convert the file, and we do all the steps necessary for the distribution of that file. So it's a true full service offer. And that means that we can go to a game developer and tell them, give us the file and we send you back money. So there is very little efforts that, stuff that the game developer have to do themselves. So next slide. So if you look on the technology itself, and that's where the history of Flexion is so important. So we have for the last plus 10 years worked on an automated process where we can take that game file dimension, chuck it into the machine, and the machine can then read the binary code of that file, and by doing that can automatically replace and add code to the file, so we take control of the file. And when we have control of the file, we can then add the functionality needed, so we can replicate the file for the various stores. And this is, nowadays, is a really, really important technology, because a modern game developer may update their game. They may say every third week, but they may actually do it every week. And if they're really working with the game, you can update every third or fourth day. So if you have 20 games, 10 stores, you need a technology. You can't do it manually. You don't have the time, and it's not accurate enough to do it that way. This is a technology that is patented in the US. It's a patent pending in Europe. So next slide is the business model. The business model is very simple. We get a file, we convert it, we put it out in a store, an end consumer goes, downloads the game, and then he starts to buy, say, golden coconuts for $100. Yeah, those $100 are paid down to the store, who traditionally took 30%. So the store would pay us $70, which we then share with the developer on an 80-20 basis. What we see, the trend in our market is that the stores are reducing their store fee, and we start to see rev shares down from 15 to 20%. So assume it's 15%. The store charge 15%, we charge 15%. So we actually offer the same 30%, including our own fee, which the developers are prepared to pay in Google and Apple. So effectively, we do it at the same cost, but we do everything for them, and they don't require any user acquisition. So it's a really powerful offering to the developer. Next slide. So how far have we come? We went for a global rollout 2 years ago, and since then we built up the biggest portfolio of games on our market. So we have now signed 16 top 500 games. So just give you one measure how big they are. So these games on an annualized basis across all platforms, not just for us, but including Google, Apple, everything else, generate on an annual basis above $1 billion. So it really is top-end IP we are working with. I mentioned the technology, and we also now have the biggest distribution offer in the market. So we cover basically the biggest stores on the market. And these are stores work very big. So what we try to achieve here is to create a stable and diversified platform and model to work on, which is also profitable over time. And by creating that kind of stability in combination with that, we really will work with the top-end the content on the market. It's a perfect position to strike for future growth. So there is a saying on the market that content is king, and we are already now the king on our market. So it's a very, very interesting way to look at the position at the moment to grow further the company. So next slide. This is something we've been asked questions about since the start, which I think everyone struggled to understand a bit. Why is it only us who can do this? And we tried a lot of different ways to explain it, and here's the latest suggestion. And it's a chicken and egg problem. And it basically is that if you think about it, to to get a portfolio of games, you need the channels and you need the technology. And if you have them, you can't get the games. The same with the technology. You can't build the technology if you don't have the games and the channels. So it's very difficult to build this up, this momentum we have at the moment. So basically what you have to do, you have to start with very simple game, very simple store and technology, and then you raise one of the legs a little bit, you stabilize it, and you do it again and again and again and again. And so this is something we've done over 10 years, and we therefore considered us to have built really strong barriers of entry for competition here. So think about it, someone else magically can get our technology. Yeah, that's great, but they can't get any channels because they don't have the games, and they don't have the games because they don't have channels. So we feel that we are a couple of years ahead of competition here. So next slide, financials. I can't talk too much about this because we're presenting our Q4 in 2 weeks. The only thing I want to say is the timing of releases. So we release games when we sign them and hopefully when we launch the games. And there is a lag between the two of, say, 1 to 3 months, and that is primarily that we're waiting for marketing campaigns for the stores because they have quite long cycles, and you're kind of lost in the queue and you have to wait for your slot, so to say. And thereafter, we're building up an organic user base. So it takes anything from 6 to 9 months until the games is properly up and running in terms of users and revenue. So you have to be a little bit patient in terms of revenues after you see this signing of a game. Then a little bit about the future of Flexion. So the next slide. So per definition, we are in the market where the future is. You're moving from a two-store model to a much more fragmented offering on the market. Yeah? And all of that is happening on our market. So we see a number of important trends on the market. We see the emergence of new regions. One is Southeast Asia. We have very fragmented users, languages, nations, and also payment solutions, which the big giants struggle to cover because it's very fragmented. We see new monetization models, so that all the stores active on our market, so to say, they try to differentiate themselves by coming up with slightly different offers, which creates fragmentation. But it's very powerful tools to monetize, but they're quite tricky to follow. Then we start to see the emergence of new ways to distribute games. So the traditional model was a very fixed app store, but we see that the boundaries of those stores are crumbling a little bit at the moment. So you see more hybrid models coming out on the market. And that could be that the game pops up directly in your mobile through, say, a virtual preload. And then that actually all the payment and all the flows are actually in the game and not through a store. That's very, very exciting. We think that is the future. And finally, the really Formula One or turbo effect here, that is user acquisition. The whole market outside is driven by user acquisition and advertising, and it's now slowly coming to our market. And if our market is 2 billion and the bigger market is 90 or 85, there is a lot of upside here. So why is this so good for Flexion? So if you go back to the technology, we see that if you remember that we put in the file and we take control over it. So what we can do is to follow all these new trends really, really closely. And then when we see something that we believe in, we can then develop support for it, and we can spread out the cost of that support, development cost, over a big portfolio of games. Whereas a game developers may have 1 or 2 games, struggle to justify that investment. And we can also then very easily or effortless put that technology into the games because we have this technology. So we're perfectly positioned to follow these new trends. So what are we trying to build, just to wrap it up? So that's the next slide. Yeah. So we're building a core business, which is basically a stable, balanced, profitable company, which we can grow by adding more games, adding more distribution, and grow existing games on existing channels. So it's a multi-dimensional growth here, with quite a big multiple in terms of revenues. But from there, because we have the content, we can take advantage of the new opportunities. We can work with alternative promotions, solutions, I mentioned. And that's for us very much not a revenue driver, but it's a margin driver where we can help and build the support needed for these stores ourselves, and they can then pay us for our development time, and they have very deep pockets. The next one is, of course, the hybrid stores. When you don't have the full stores offering, if you distribute something which is not the traditional store, someone needs to add technology to support that, and we already have that. So we can help the market evolve into these hybrid stores. And that's, of course, a massive revenue growth for us opportunity. And finally, you have the user acquisition. That needs technical support, understanding, and people in the middle. That could be us. And that is a basically unlimited growth opportunity for us. So just to summarize, the go-to-market strategy is to build a stable, diversified, and profitable company with the biggest content. And from there on, move into this kind of turbo effects in terms of revenue. So that's Flexion. Thank you.
Thank you, Niklas. I was wondering, you've mentioned previously that you've seen some increase in player engagement following COVID-19. How has this trend continued into perhaps April and May, and also has monetization in your channels been affected in a positive or negative way?
Yeah, unfortunately, we're releasing our numbers in 2 weeks. I struggle a little bit to comment on this, but generally, it's been widely reported that the market that gaming has been picking up. It's people are sitting home, they're bored, and they use their mobile a lot, so they play a lot of games. I think what we are hoping for as an effect is that you have more time, and you start to explore new means of distribution. And for example, in London, there was a lot of items that actually you couldn't buy in the shops. So everyone explored whatever. So it's a lot of farmers apps and local food apps that actually benefit a lot. And we see and we hope the same to happen on our market. So hopefully here we see a long-term shift towards alternative distribution, where you actually can have better monetization and better offerings for the end consumer. Yes.
And also, I was wondering, has the lockdown had any effect on your ability to sign new titles to your portfolio? And if so, how have you adjusted your operations to counteract it?
To be frank, it seems like a lot of people are sitting home. I'm not in the marketing or sales team, but what I heard from them is that it's actually quite easy to reach out to people because people are bored sitting home and they have time to consider what you call kind of alternative solutions like us. So we haven't really seen any negative effects here. We of course, we work a lot with the Chinese developers who are now coming out to the massive Chinese market, and they focus Google, Apple, and they came out of this pandemic quite early, so it has been quite limited effect, we think, on us.
And also, I was wondering if you could say something about the Huawei and Xiaomi distribution channels. How are things going there? Is it going according to plan, or what's your experience so far?
It's Huawei is a very interesting case. We all know that they've been struggling a bit with the US. So they have their old phones, or the existing phones have the Google services on it, but the new ones don't. But it's in terms of hardware, it's really strong, a really strong offering. So Huawei's put down a $1 billion fund to attract content to the platform. And on the game side, Flexion is here. We already used to work with non-Google because we do it on Amazon, on their Fire devices, which is not Google supported either. So we're very close to that. So we're supporting Huawei and will continue to do so. And of course, they have massive user bases. It's really early days for us in terms of the opportunity, but it can be really big. Xiaomi is the next phase. They're a bit behind. So far, they're on Google. But you have them, and then you have the other big Chinese giants like Oppo and Vivo, who's also slowly looking into their offerings on the kind of Western markets. So there's more to come, so to say. Yeah.
And lastly, just looking at the rest of the year, where will your focus be? Will there be any specific area will you focus your attentions during 2020?
For us, it's very much as explained on the last slide. It's to get the existing games, to grow the existing games on existing channels, is to add more games, and that is something that becomes easier and easier. The bigger we become and the more accepted we become in the market. And then is to add a few selected more channels to really cement this core strategy. And at the same time, it is to start looking at new opportunities, really to turbocharge the growth here. But the strategy is very much to grow the core platform of the company during this year.
Okay. That's it for me. Thank you, Niklas, for coming here.
Thank you very much.
Presenting.
Thanks a lot.
Thank you.
Bye-bye. Bye.
Okay, let's start up with the next presentation where we have the pleasure of welcoming Carl-Johan Zetterberg-Baudry, who is the CEO of Doro. My name is Simon Granat and I'm covering IT and tech stocks at ABG, and I will be moderating this presentation. But with that said, now let's get started. Carl-Johan, please go ahead.
Thank you very much, Simon, and lovely to be here, even though it's special times. So we do this to meet you digitally rather than physically. But that's the new way of working today, and to a large extent that works very well. And probably come back to that later. It seems, or that's something where we see that the business that we are in is more relevant than ever during a situation like COVID-19. So Simon, if you could change the next slide, please. And I will give you a short introduction of Doro, some understanding of the market and market environment, and our ambition at Doro in transforming senior care and our strategy in doing so. If we take next slide. Doro is a senior-oriented technology company established back in 1974 and with a long history of technology and transformation. We're headquartered in Sweden with close to 1,000 employees. Doro is the market leader in Northern Europe in senior care technology and the worldwide market leader for senior mobile phones. Yearly, we assist more than 3 million seniors and have an annual revenue of 2 billion SEK. And our focus on care, we are now on an annual recurring revenue from care of approximately 400 million SEK. And for the last 5 years, our annual average growth within care have been 34%. Next slide. The aging of society is one of the modern world's most pressing challenges. There are more and more seniors, there's a shortage in healthcare professionals, and the current healthcare systems have a challenge in absorbing the drastic needs in care. And I think the current pandemic with COVID-19 have just emphasized the need for social care and health care and the need for different type of solutions and structures in order to cope with the need that we see now and that we probably will see in the future. Next slide. So our business today in Doro, we have 2 business segments. The first one being business segment care, which is a business focused on technology-enabled care services for senior relatives and caregivers. This is a business that's primarily driven by public procurement, where our typical customers are local authorities, municipalities, housing associations, and similar. And our second business segment is business segment phones, which is focused on smart and easy to use mobile phones targeted to seniors. This is a business where we predominantly sell to retailers and operators throughout Europe. For both our business segments, so our customers are typically a B2B or B2G customer as in care, but the end user or the end consumer is the senior itself, using our products and services to facilitate everyday life and increase safety and well-being. Revenue-wise, 2019, our business segment phones accounted for approximately 75% of our revenue, and care accounted for roughly 25% of overall revenue, of which services accounted for close to 80% of the total business within business segment care. Next slide. As I said in one of the previous slides, Doro is a market leader in Europe In our business segment Care, we are the market leader in monitored connections in Sweden, Norway, and the UK. In Sweden and Norway, we have market share of monitored connections of over 40%, and in UK of over 10%. And for phones, we are the clear market leader for senior mobile phones in Europe, with more than 60% value share in our main markets, Sweden, UK, France, and Germany. Next slide. Financially, Doro is a growing care business. Net sales, as you can see, have grown up to be more than 2 billion SEK in total. And our care business has also grown steadily in the last couple of years. The recurring revenue business, as I said, is close to 400 million SEK in 2019. And since 2017, the annual growth in services have been close to 40%. And being a growing care business, but also with an improved underlying profitability, so adjusting for any restructuring or other one-off related costs, the adjusted EBITDA percentage is 11% in 2019, and a solid cash flow. So last year and the year before, our free cash flow has been over 100 million SEK in total. Next slide, and I think you can jump one slide ahead directly. So we go into the market, and especially to give you some more emphasis and insight to the market of technology-enabled care. As I mentioned briefly before, there are acute challenges for the healthcare systems in Europe, driven by a number of factors. One is, of course, there's a growing elderly population. As I mentioned before, within the coming 30 years, there will be 50 million more seniors in Europe. So as you can see, the total number of people of 65 plus will be more than 150 million people in Europe, 2050. There's a shortage of healthcare professionals in supporting taking care in this growing elderly senior population. Already today, there's a shortage of healthcare professionals, both in healthcare and social care, with more than 7 million persons or staff in this. And in 2035, the deficit worldwide is expected to be as much as almost 13 million people within healthcare. And on top of that, there's a growing funding gap for governments, regions, and local authorities alike in funding the increasing need for social care. So what we can see here is an example from UK, where there already now is a deficit in funding for social care that's more than £2 billion, which is expected to more than double in the next 5 years to more than £4 billion in the UK alone. Next slide. This, of course, means that the market is demanding more efficient care models. And as you can see, a few of the challenges, but also the solutions, there are more and more working age people to support fewer, as you can see, where today, roughly, there's one senior for every working age individual, whilst we see in 2060, the projections are that the relationship, instead of 1 to 4, will be 1 to 2. Meaning that fewer will have to support more. And also where the cost of people being treated in hospital care or residential care compared to be able to be treated in home care is significantly more expensive. So I think Combined with the challenges I mentioned in the previous slide with an elderly population, shortage of healthcare professionals, and the funding gap, means, of course, we need to find new solutions to change this picture. And we firmly believe that technological solutions that enable senior care at home while reducing costs for society will be the future and the way we have to go going forward. Next slide, please. And these factors, and as we shortly mentioned, part of the solutions, and I'll get into a little bit more on details on our strategy and how to enable, how to find solutions to tackle the challenges we mentioned and to enable people to live at home safely and securely and be home cared. But those factors means that the addressable market grows from our perspective as the senior population increases and people live longer. It's expected that the penetration of care services will increase and revenue per customer or user will grow as new services and new products are introduced. So all in all, that means that the European market for technology-enabled care is expected to nearly double from roughly 2.5 billion euros today up to around 4.5 billion euros in 2024. Next slide. And you can jump one slide ahead as well, Simon, and looking into our perspective and Doro's way in helping and driving the transformation of senior care. So looking at the world of Doro to some extent in senior care today, one key cornerstone of the offering we have is our Doro Contact Center, where we have qualified staff and intelligent software platform supporting the more than 3 million seniors that we support on a yearly basis. And we then have products, services, and solutions to support family to stay informed and involved, to support seniors in individual living with care phones, sensors, and software solutions. Also for seniors to be able, in the same way, stay safe and secure and live their life at the fullest in assisted living, but also to have mobile solutions for seniors to enable them to move freely and independently in a secured way, but also solutions for caregivers, including local authorities and municipalities, to have access to information and data about seniors in their environment. And next slide, please, Simon. And as I mentioned before, everything we do at Doro, we do to try to improve the life of seniors. And as I mentioned before, we assist more than 3 million seniors on a yearly basis to help them to live a more safe, independent, and fulfilling everyday life. And here you see a few of the testimonials on seniors that we have supported throughout the years in helping them to take better care of loved ones, to be able to feel confident, more safe, and more independent. Next slide, Simon. And one very important aspect that we see in tackling the solutions of current care or care solutions and moving into the next generation solutions and transforming the market for senior care is to move from today's more responsive and reactive solutions to the future solutions that will be more predictive. So the current solutions of today are in many markets more analog-based, standalone systems which are more responsive and reactive to alarms and sensors and information that are received from those products. Moving into the future market where IP or digital solutions and integrated solutions from product, services and software, including mobile and apps, enabling more monitoring of daily life activities and empowerment of caregivers will drive more predictive and preventive solutions. And also move from more product-oriented offerings to even more services and solutions-based offerings where, as I said, integration of hardware and software will create a more sort of complete alternative and solution for the seniors, for families and for caregivers. Next slide, Simon, and you can jump one ahead as well to talk a little bit about the strategy from our perspective in being a driver and the leading company in transforming senior care. So for us, as I said, to be a leader in transforming senior care and tackling the challenges that we talked about, we have a few strategic priorities to achieve that. One being sort of focus on our core development, to continue to innovate and build a foundation in our business, to drive further efficiencies and sort of continuous improvement in our business, to make sure that we have the right service delivery excellence and efficiency in everything we do. And from a short-term focus is, of course, making sure that we drive the right type of margins in our care business and improving efficiency in the products and services that we deliver. The second part is market expansion, which I will come into a little bit more detail very soon. But it's to expand in both existing markets and into new markets. And then the third one is service expansion, where new products and software platforms will enable us to add new services, which will drive an increase in revenue per customer, revenue per year as well. So next slide, Simon, and to talk a little bit more of increasing average revenue per user, as we said before, with digitalization and with service expansion. And here you could see some examples and indicative numbers for different markets where we are active today in technology-enabled care, where UK to date is an analog-driven market and as such more reactive-driven in terms of the products and solutions that are offered in the market, compared to then Sweden and Norway, where Sweden is a digital market and Norway has also moved to digital but increased the scope of services to some extent. And as you can see, we moved from an analog market to more digitally driven market, and as we move from a more narrow and more reactive type of service scope to a broader and more digitalized service scope, then the average revenue per user increases. And maybe as you might see, but these are yearly values. And then, of course, as we move into integrated solutions with prevention, with analysis, etc., then we see that the average revenue per user should and will increase as well. Next slide, Simon. And then talking about market expansions being the other very important aspect for us to grow and expand our care business. And as you can see today, and as we mentioned before, we are the market leader in individual living, in number of monitored connections in Sweden, Norway, and the UK today. But what we are actively doing in the markets where we are strong today and have an active service business is moving into also assisted, We are predominantly a very strong player in individual living, but we have and are continuing to develop strong solutions for assisted living and are expanding into the market for assisted living in Sweden, Norway, and the UK as a first step. And as you can see, here we are opening up a large and very interesting market that for us has been untapped the last couple of years to a large extent, and targeting that as well. And then in combination, we are also looking into expanding into new markets, both looking into interesting large markets in Europe, like Spain and France, for example, where we see that an expansion organically or through acquisition can be relevant, but also looking into expanding, I would say, maybe more from our existing geographical presence, moving into maybe, for example, Denmark and Finland, based on the presence we have today in neighboring countries. So a combination in market expansion, both of expanding the addressable market in terms of the type of solutions we offer and the type of market when we talk about individual and assisted living, but also an interesting opportunity to move in with our solutions and products and services into new markets as well. And then we can take next slide, Simon. And I think that rounds up the presentation from my side, and to leave over to you, Simon, if there's any questions that received and you would like to ask.
Thank you, Carl-Johan, for the stellar presentation. It was very giving, I believe, to many people. And perhaps starting off from this Q&A session, I believe that many people have COVID-19 on their mind. Is it possible for you to give any guidelines for how May has progressed? I know that in the Q1 report you say that April's order intake was down by roughly the same as in the second half of March. Is this also the case for May?
I think unfortunately I can't be maybe as specific as you or what others would like. But I think in general what we can say, we do. I think a large part of May has been a similar situation as April, in the fact that many of our larger markets have been closed also during at least first half of May, and as Germany, France, UK. What we've seen now in the second half of May is there are sort of slowly trying to open up societies again, making it possible for people to go outside, making it possible for shops to start to reopen, etc. So yes, we are starting to see, call it, slow signs of going back to a more normal way of life, or life as we knew it before COVID-19. I think then with that said, I think we still see there is some, call it, consumer are still a little bit cautious, both from a virus perspective and I would say an economical perspective. So our estimate is we will start to see recovery, but a slow recovery. I don't think there will be a sharp spike upwards and we're normal as this never happened within the next couple of weeks. I think there will be a gradual return in terms of sales and life going back to a more normal state.
Interesting, thank you. You also, a couple of weeks ago, you announced that you have implemented a cost-saving program. How has this cost-saving program progressed, and have you already today reached the level that you wanted? And what does this refer to?
Yeah, good question, Simon. I think so far we are progressing according to plan with the cost-saving program. Of course, I would say the size and the length of the program is, of course, very dependent on how sales will return here after, I would say, the most critical weeks of COVID-19. But according to the plans that we have, we are in line so far. They are progressing as they should. And I would say the cost savings are referring to a number of different activities, but they are both referring to what we in Sweden would say short-term leave. So we've had a number of employees on short-term leave in more or less every country. We've also implemented, of course, and that's a natural effect of many countries being closed and there is essentially no way to travel, but reducing spend in indirect, like travels, like other purchases, reviewing investments, what investments are right to do now and what should we maybe do at a later stage. And then also, of course, reviewing the organization in general. And we have, as an effect, and according to our strategy, made some efficiencies in the organization, and as a result, reduced the number of employees slightly here in the last 2 months as an effect of COVID-19. So I would say it's it's a quite broad palette that we've implemented to reach a cost level that we think is more healthy given COVID-19.
Okay, thank you for that, Carl-Johan. Unfortunately, I think that we are running out of time, but are there any final words that you would like to say before we hand over the presentation to the next presenter?
No, thank you very much, Simon. Thank you for good questions. I think as we highlighted through our presentation, there are a lot of challenges on both social care and healthcare. I think COVID-19 have just emphasized that even more. And we as a company, we have a strong position in this market and have a unique understanding of the seniors and their needs. And we're fully committed to be a leader in transforming senior care and improving lives for seniors.
Okay, thank you very much for that, Carl-Johan, and stay safe.
Likewise, thank you very much.
Okay, hello everyone and welcome to ABG's Investor Day and the CTT presentation. My name is Carl Bokvist. I'm the responsible analyst from ABG covering CTT systems. With us today we have the pleasure to host CEO Torbjörn Johansson and live on the feed is also CFO Daniel Ekstrand. With that being said, I leave it over to you, Torbjörn. Thank you very much for joining us today on this webcasted event.
Okay, good day to all of you. I think we go directly to page number 2. As you all know, we are working with humidity control in aircraft. We make humidifiers and we make dehumidifiers, and that is to control the climate both in the aircraft and in the sky. We take page number 3. If we look at the first quarter 2020, that was for us business as usual. We delivered as we should do, an EBIT margin of 35%, and the cash flow adjusted for tax payment was very good, 28 million SEK. We take page number 4. The second quarter will be different. We will be impacted by the COVID-19, and we forecast a net sale of 50 to 60 million. It's about half of what we did sell last year at the same quarter. We expect the aftermarket to drop very much, about 50%. The OEM will be less hit by the COVID-19, and VIP will be stronger than 19 because we have good projects in the VIP sector. We take the next page, page number 5. As you all know, COVID-19 has hit the aerospace industry very hard. Literally almost all the aircraft have been standing on ground during April, and the same for May also. So compared to other hits for the aerospace industry like SARS or the September 11, we think that this drop lasts for a longer time. We are in the center of it now, and we will see some recovery, but the recovery will start with domestic flights and flights perhaps inside of US and Europe, and the international traffic will pick up later. We take the next picture, page number 6. For CTT, this will mean, if we look at our different business segments, if we start with VIP, we have a lot of projects we are working with. So for the VIP, 20 will be stronger than 90. If we look at retrofit, the red line, of course, it will drop to 0 more or less. This is because the airlines don't have any money to invest in any retrofit system, and that will last for some time until at least the airlines start to recover financially also. If we look at our OEM sales, that is very important. We will have a drop, but both Airbus and Boeing, they have decided to continue to build for us, especially the A350 and the 787. They will continue to deliver them to a lower pace than 19, but still at the reasonable levels. The aftermarket, which is important, very important for us financially, it is dropping now. We see that in the second quarter, and it will drop down as long as we have going through this crisis. When it starts to recover, it will recover with the airlines when they start to operate the 787 and the 350 again. How quick that will go, we don't exactly know. But we take the next page, page number 7. As again we said regarding the OEM, Airbus has come out in April and say they will build A350 to a rate of 6 aircraft a month instead of 9 as they had 19. That will last for 20 and I think also for 21. Boeing also stated in April that they will go down to about 10 aircraft a month during 20 and then going down further until 2022 down to about 7 aircraft a month. Of course, this is much lower than 19, but it's still at a reasonable level for CTT. We take the next page, page number 8. If we look at the aftermarket, of course, the aftermarket for everyone in the aerospace industry is down. It's close to zero for many. For us, it is especially the wide-body aircraft that fly long distance where we have our systems on. And for us, the fleet of 787 and 350 are the important one. There is about 1,300 of those aircrafts out there. And the thing that is good for us is that it is those aircraft types that was last parked by the airlines, and we think they will be the first one to start to fly. So we are lucky that our products are on the 2 most popular aircraft. They can fly all the distances, and they are the best. They have the best economics of all the wide bodies, and they have a size that is not too big, because when they open up the long distance flight, and they will not need too big aircraft. They will prefer the little bit smaller ones. We take the next page, page number 9. This is a new page. We have looked into statistics where we can see, especially this is for the 787 aircraft, that is our most important aircraft. And you can see on the picture how many of the 787s that was not in service during the weeks that has passed. You can see in the middle of April, about 622 aircraft were parked out of a total fleet of 967. But since then, more and more 787 aircraft have started to fly again. If you look at the top left corner, you can see the total flight hours that 787 have performed. In March, it's a decrease of 39% compared to before COVID-19. In April, it was down 73%. And in May, the May data we will get by the end of June. But as you can see, 787 is an aircraft that's still flying, and of course that is the one that produces the most of the market for CTT. So I think this is promising. More and more 787 starts to fly, and they fly relatively many flight hours when you think that the whole fleet is under, but they still fly about 30% of what is normal. We take the next page, that is page number 10. CTT is in a strong position that we should go through this crisis. We have to adapt to what we call the new normal. So during the crisis, we expect that we will have about 40 to 60 million in sales. Our objective is to remain profitable, and we have lowered our costs on a yearly basis. It's about 20 million. We have laid off 20 people in production because we don't need them, because Airbus and Boeing are building less aircraft. And on the white collar side, we have gone down in working time to also save money. We have a very strong cash position. We have still, at least we had by the end of first quarter, over 100 million cash. Available credits is about almost 100 million more. If we look at our different segments, if you look first, the most important one is, of course, OEM. Both Airbus and Boeing is lowering the production rate of 350 and 787, but it's still reasonable. If we look a little bit further, during 21, Boeing starts to deliver 777X, and they are ramping up production also on the MC-21, the Russian aircraft. And a year later or so, we will start to deliver our first system for the Airbus narrow-body family, first drying systems. If we look at retrofit, of course, that is not looking very promising. We will not sell retrofit system before the airlines start to earn money. But on long term, of course, the drying system is good for the sustainability. The fuel saving is interesting, and we can save CO2. And humidifiers could be more interesting now for the cabin environment because it's not good with too dry air in the cabin. VIP looks strong during 20, and as you know, we have started to work on business jets. We have been thinking about that for many years now, but we got a chance to develop our system for the biggest Bombardier global aircraft, the 7500, and we expect to deliver to 2 aircraft during this year. So the business jet segment there is some potential for CTT. The aftermarket is, of course, the sum of everything. We know that the aftermarket will recover relatively quickly for us because the 350 and the 787 are these aircraft that will earliest start to fly. And as we saw earlier on the page, 787 is still flying, even if we have the crisis. And you should also remember that even if we produce less aircraft or produce system to less new aircraft, every aircraft we deliver to is increasing our growth in the aftermarket. Even if it's at a slower pace, the aftermarket will continue to grow. We take the next slide. That is page number 11. Here you can see, I like to show you aircraft pictures, but here you can see what we are working with for the future. On the left top corner, you have the Global 7500, an aircraft that can fly 15 hours, a private jet, with a relatively big cabin. There we are now developing two systems for 2 aircrafts. You have the A321 XLR. We are developing the drying system, which will be offered in the whole A320neo family. On the left lower corner, you see the ACJ A320. That's a VIP aircraft where we work together with Airbus to improve the system. It's easier for the completion centers to install. And in this program, Airbus will support us in selling the system. They will recommend our system for the Airbus corporate jet aircraft. It's very important that Airbus is in favor of our system and recommend the VIP customers our system. On the right lower corner, you have the fin of the I think it's the winglet of the 777X. That is, of course, an aircraft that Boeing starts to deliver in next year. And we have humidifiers on that, and we have humidifiers for first class on the launch customer Emirates. And I think ANA will also be an early customers where we have humidifiers for cockpit, business class, and first class. We take the next picture. That is picture number 12. As we said, OEM programs, 777 is coming. We have MC-21 is coming next year also. And a very big OEM program could be the A320neo. And that is from 23 and push. We take the next picture, picture number 13. And then here's a slide we have made to show you a little bit what the airline industry do to really try to get the passenger back into the aircraft again. First of all, you should know that the modern aircraft like the A350 and the 787, they have very good ventilation systems in the aircraft. They change the air very frequently, and they have very efficient filters. So I think in the aircraft, it's really a good environment. So there is not more risk principally to catch the viruses in the aircraft than in the airport or anywhere else. Boeing, they have started a confidential travel initiative where they go out and try to help the airline make different measures that will make flying safer. That's a program that is ongoing. And the international society, IATA, they do a little bit the same. The airline industry really tried to do a lot of things that will make air travelers safe and increase the confidence by the passenger that it's okay to start travel again. We take the next picture, and that is picture number 14. We, of course, make humidifiers, and it's well known that it's not good for the human body to sit too long in very dry environment. If you fly long haul, if you fly business or first class, you have a relative humidity that goes below 10%. And of course, all the aircraft or passengers, they dehydrate, and the mucus on the people are affected by this dryness. And if you dry out, if your immune system is weakened, you have a bigger risk to catch a cold, and also, of course, COVID-19. This is well known, and I think we have a possibility that this dry environment in long-distance aircraft, especially in first and business, could be discussed. And perhaps when the crisis is a little bit over, or at least we have come some time, it could be that airlines are more interested to invest in humidification for premium passengers, but also for the crew and the pilots. So I hope that our product, we are sure that our product is good against dehydration, and I think dehydration will be discussed during this pandemic and the effect it has on the immune system. So perhaps we could have some help. So we take the next picture. That is the last one. So if you should fly long haul now, and if you should fly business class, I would say, it's a little bit bullish perhaps, but I would say the two best airlines you can fly with is China Southern and Aeroflot, because they have the most modern passenger aircraft, the A350, with a very good ventilation system, very good filtering systems, but they also have humidification for business class. So as a passenger by those two airlines, you will not dry out if you fly business, and you have a chance to arrive rested and in a better shape that you can withstand any attack from the COVID-19. We are very happy if we would have celebrated it a little bit more with Aeroflot without the COVID-19, but if you fly long distance, please fly with Aeroflot or China Southern, because then you have the best air in the air. We take the next picture, and that's question and answer. I said we should make it in 20 minutes, so Carl, was it okay?
Very good, thank you, and we'll keep Aeroflot and China Southern in mind once we feel that we can or are allowed to fly again. Perfect. A first question revolves around a bit short-term or near-term data, I should say. You touched upon the data that you've seen regarding the B787 Dreamliner, but otherwise, can you give us an update on what you have seen now during May on your end in terms of OEM deliveries and aftermarket? Have you seen any changes from the situation we had in March and April, perhaps?
We have predicted that the aftermarket goes down, we see nothing else than what we expected. And regarding OEM sales and so on, it's like planned. Boeing had a gap in April of Seattle operation in South Carolina, but both plants are working again, so we deliver again. Also, and on the VIP side, as we have said, we have big projects and good projects, and they are running as usual. On the retrofit, of course, we are down to more or less zero.
Now, if we think about both, you've guided not only Q2 here, but you've guided the sort of potential sales range in a low demand environment, as you say. And I think if we listen to most airliners, there is an expectation that long-haul flights should start to begin again towards the end of the year or even in the beginning of 2021. I think the comment you made in your last quarterly report was that you expected long-haul flights to resume activity again in the fourth quarter. Is that still your view?
Yes, I think, and as I show you the picture about 787, it's even though the April and May was the toughest time for the crisis, there was still 30% or 40% of the aircraft in operation, and the flight hours in April was still 30%. So even if you say that the long-haul fleet is standing on the ground, that is not correct for the A350 and the 787 especially. So, and for us, I think it doesn't matter too much how many passengers you have in the aircraft. Of course, the airline earns less money, but if they operate our aircraft, the flight deck humidifier is in operation and the crew rest humidifiers are in operation. So we expect that, first of all, 350 and 787 up, and that we will have aftermarket sales also, because they are not down to zero.
Understood. And then if we perhaps think about, because I mean, you and I are now talking to one another through a web or video conference system, and I think this has been the topic of many people recently regarding potential secular trend shifts after COVID-19. So what is your view regarding the future of air travel? And I mean, business travel is a very important part of a business for many long-haul flight operators. Do you see any long-term strategic changes because of the way we people communicate and do business with one another?
Of course, this is perhaps my personal view. You know, I have been around for some years, and every time we have made some improvement in digitalization and globalization, you say now we don't need to travel anymore, and then we have traveled even more. So I think, of course, we will have some problem in the aerospace industry for 1, 2, or perhaps 3 years, but I'm pretty sure that we will come back to normal again and come back to this growing curve. If you ask me personally, I have not been at Boeing for about a year. I really need to go there again. I'm homesick to see it. And I think a lot of business people, okay, you can handle your business via WebEx and everything for some time, but don't make any business if you don't meet people. So business travel will come back again. And if you look at other travels, okay, now we have a problem with tourism and so on, but the young people and most of the people in the world would like to see the rest of the world, so they will come back and travel again, I'm very sure. It's a little bit longer drop than normal, but it will come back.
With that, I would like to say thank you very much, Torbjörn, for you taking your time here, and thank you everyone who has been listening to this CTT presentation. Please stay tuned for more presentations from our Investor Day, and with that, again, I say thank you and have a continued good day.
Thank you very much.
Welcome back, everyone. My name is Stefan Knutsson, and I'm an equity analyst here at ABG. Today we have IT consultancy company Avensia with us and their CFO Anders Veitje. Welcome, Anders.
Thank you so much. Should I take it from here?
Yes.
Well, welcome everybody. I had obviously hoped that I would meet all of you, in a different way and form, but I guess we have very different days and times right now, at least. But anyway, it's a pleasure to be here and speaking to all of you. Stefan, I think that you can go to the next slide. My name is Anders Veitje, and I'm the CFO of Avensia. I started 1st of January. I joined Avensia as CFO. Previous to that, I was actually a member of the board for 14 years, so my career kind of goes a bit backwards. A bit an odd career move, I would say, but very exciting to be part of Avensia's operating management team indeed. I am also one of the major shareholders of Avensia, which makes it even more exciting to have joined Avensia, I must say. Stefan, I think you can take the next one, where Avensia's vision is outlined. We have a very ambitious vision, a very bold ambition, and that is to be the leading global expert in modern commerce. This is a vision that was put in place, I think, as late as last year, or if it was 2018. We'll come back and speak a little bit about the history of Avensia that has changed over time. But today we are a company focusing on modern commerce. Next slide, please. I think it's quite natural, of course, to touch upon the corona pandemic, first of all, or the COVID-19. I guess this virus and the situation we're in comes with many names. We as a company, and I guess that goes for most companies out there, we are obviously affected by the corona pandemic. That goes without saying. And our focus, and I guess most parties' focus during this, call it, initial phase of the pandemic has been obviously, to safeguard the health and safety of our employees, customers, partners, and other stakeholders that we have. We have adhered to government recommendations in all the different countries where we operate, mainly in the Nordics, but we have a few other outposts in the world as well. We will talk a bit about them a bit later. Most of us are working from home today, and I think, and I guess that applies to many of you people listening in to this presentation today. And for us, it's actually something that we are quite used to. We have a lot of people spread out on many different offices, and our service delivery to our customers often consist of teams that are being put together of people sitting in different geographical locations. So we have actually managed to cope very well, I must say, with now being more spread out than we were even before. And we have managed quite well, actually, to continue to deliver value to our clients. What we also think and believe, and I think start to see, is that the corona pandemic is also accelerating the retail digitalization. We can clearly see that customers understand now even more and even better, and some people obviously and some businesses have learned it in a very a painful way, obviously, that you have to have a digital component of your business offering today to safeguard your business for all possible scenarios that can happen. that is clear, and I think that is something that will benefit companies like Avensia going forward. We have listed here Coop Norge, which is an old and very dear client of ours that we have worked with many years. Avensia assisted them in providing and putting up with an extreme time pressure, I must say, a site that enabled them to deliver to many residents in Norway. And it was a site, I think it was delivered within 2 weeks' time. So we have had things like that also happening with the clients coming in with demand on a very short notice. I said in the beginning that we have been affected. Obviously, we see a bit of reluctance among our present customers. We see potential new customers pushing investment decisions into the future. So there is a bit of I shouldn't say hesitation. I think many management teams and in many boardrooms around the world, cash preservation is now, the main focus. So I think, a bit of negative impact short term, definitely increased opportunity mid to long term. And Avensia, obviously, we're not part of the problem, but we can be a significant part of the solution for very many players out there. If we take a look at the next slide, I'm just briefly going to touch upon some of the trends that our customers are facing today. Obviously, globalization and digitalization is a major trend. We see a lot of nationalistic trends right now in if we look at the globe from a political perspective. We think, however, that this will have very little, if any, impact on consumer trade patterns, and that is obviously what will drive our clients' business models. So definitely that, an increased globalization, we're truly having one world from a consumer perspective. Our clients, they need to have a holistic multi-platform view on customers. They need to be able to face the customers in a uniform manner, regardless of channel, and regardless if it's in a store, if it's online, if it's in social media, whatever it might be. The need for speed is also becomes more and more apparent. It applies to us. Only a couple of years ago, we had clients coming to us and they were actually quite happy when we said that, okay, we can do all these things for you and we'll be ready in 7-8 months. And they said, great. Today they come to us and if we say 7 to 8 weeks, they say, no, that doesn't work. It needs to be even faster. So the need for speed is there also when it comes to what these solutions need to do for the clients of our clients. People going online, people consuming online, there is often a very short attention span that needs to be captured by the solutions offered by our clients. And if you don't succeed in capturing the attention of the consumer during that very short period of time, well, then the consumer might go to the competition or go somewhere else. Strong trend coming, re-commerce and sustainability. Re-commerce being that clothes, for instance, maybe, big companies selling clothes, they also start to rent clothes or they arrange for portals where people can resell clothes that they have owned for, some time. Very strong trend. Logistics and fulfillment options becoming more and more important. Customization and personalization. Today it's not only like, our clients, they don't only want, they also need to start to understand who their consumers are in a much better way than they did historically. Where do we live as consumers? What sex do we have? How old are we? Everything when it comes to consumption patterns, and when during daytime do we do the shopping? When and where do we want to pick up our goods or services or whatever it might be? We also see kind of I would say that there is a bit of a polarization in the market when it comes to experience versus transaction. Some clients, they need to build kind of an experience around their offering. It's not only about selling a t-shirt or whatever it might be. It's about providing an experience for the client, build a very strong relationship to the client over time in all different kind of channels. And we have the other side, which is extremely quick. It could be groceries, it could be for me to build to buy a printer refill or something like that. I don't really care where it comes from. I have no real relationship with the seller. I just want that one thing. I want it very quickly, very easily. I want it cheap, and I want it probably delivered yesterday. Another big thing, obviously, coming into play, artificial intelligence, voice, video, all sorts of chatbots, etc. Physical and digital blending together. We do have people that only operate on a digital basis. We have people no longer maybe, but with an extremely strong focus on physical. But I think that these two things start really to blend together, where a physical presence is needed, but where a digital presence is definitely needed as well, and these two come together. Also historically, it might have been very clear if a company was business to consumer, business to business, direct to consumer, or maybe just selling through marketplaces like Amazon or Zalando or some other player. But this also starts to come together, and it might not be clear anymore where our clients operate, and most often they need to be operating in all these different kind of segments. If we go to the next slide, basically capturing, I was about to say our mission, but it's not necessarily our mission. But Avensia, we increase the competitiveness and profits for our customers through products and services for modern commerce. So that's that's capturing what we are delivering. I'm coming back to that a little bit later on. If we take the next slide, it talks a little bit about Avensia as a company, and we have actually a history that goes back 22 years. Avensia, then with a completely different name called Luvit, was founded in 1998 in Lund. It was an offspring from Lund's University, and it was focused on e-learning back then. And very early on, it got a public listing on Nasdaq or OMX First North. I think this was, I know this was back when we had the IT bubble at the end of 99, early 2000. So the company looked very, very different then, but it's the same legal entity. Today we are more than 250 people, modern commerce experts, not necessarily all of us, but the absolute majority of us are experts when it comes to modern commerce. And we are also 100% focused on modern commerce. We started off as an e-learning company. That changed around 2007, 2008, where we merged with two other companies, and there was a couple of years where Avensia was kind of a fairly tiny IT conglomerate. Then we took a decision to strategically focus on the e-commerce side of things. Back then we were only talking about e-commerce. Today we talk about modern commerce because it's a much broader concept than it was only a couple of years ago. And today we do, I shouldn't say everything because we don't do everything, but we do, we start early on in our service offering with trend spotting and strategic advice. That's often the entry point to creating strong client contacts over time. We do systems implementation, and once we have been advising the clients, we have implemented new systems, then we often also support them in daily operations. We have many different brands, business to business, business to consumer clients, and we have customers that are doing digital business in more than 150 countries across the globe. The next slide shows where we are present physically. We have a very strong focus on the Nordics, obviously, being a Swedish company. We have offices in Lund, Malmö, Göteborg, Stockholm, and Umeå. We also have a presence in Oslo, which Norway is actually our second biggest market after Sweden. We are present in Copenhagen. We opened up an office in Chicago. I think it was 2 years ago now, which is exciting. Big market, obviously, lot of potential. And we also have an office on the Philippines in Cebu, where we are creating and building and recruiting and putting together a very strong development team of people. Presently, I think there are 40 people in the Philippines, and that's obviously something that we see that we will grow going forward. Next slide. Capturing again a little bit what Avensia is about. We are fueled by knowledge and experience, and we focus relentlessly on generating business value and driving customer success. We provide strategic advice, business support, and world-class modern commerce solutions. I think I touched upon those things already to some extent in the presentation. The next slide shows some of our clients. There are quite a few brands on there that I think most of you are familiar with. Some of them, I was about to say I'm not even familiar with them myself, but I'm slowly getting to know all the clients. But I think Naked is obviously a company that is often mentioned as one of kind of a groundbreaking digital players out there. I mentioned Coop Norway, I think, previously. Shell & Company have been a dear client of ours for a long time. We also work with Nilsson Group, Stenströms, another very reputable brand, and there are many others. Stefan, if you take the next slide. This is going a little bit deeper on Avensia and our business model. I think that the first 3 points here to create profitable modern commerce requires a broad competence. Our approach is to be both broad and focused, highly skilled and experienced experts. Tells us and tells you that this is really a business that is about people, attracting the right talent and retaining talent, obviously, building a strong culture, and really giving the people the feeling, our dear employees, the feeling that with Avensia they should be able to develop, and they should be given the feeling that they are at the forefront when it comes to developing modern commerce solutions for many of the global brands out there. We also work a lot with products and intellectual property. Obviously, we do a lot of development work, a lot of coding, a lot of programming, and major parts of that work is being packaged in different ways and being reused also as a way to be more efficient, as a way to offer the clients better prices over time, etc., etc. But also to create a more sticky relationship with our clients. Last year we acquired, which is very exciting, not right now because their business has actually come to a standstill. We acquired a company in the UK called Insider Trends, who works with trend spotting when it comes to the physical part of shopping and consumption. And they do a lot of retail safaris and other things. And obviously now with COVID-19 going around, that business is slower. But we are very excited because it puts Avensia in contact with some of the really global brands in the world. We also work and have strong global partnerships with software providers like Microsoft, Episerver, Riversand, and InRiver. Sorry. Very briefly, our key financials, 2019, we had a turnover of 300 million plus, with an EBIT profit of 26.7, net margin of 8.8, and we left 2019 with a market cap of 528 million. You can jump into the next one, Stefan. A summary of our Q1 revenues of 89 million. Which was a growth of 8% year over year, and with an EBIT of 8.2 as compared to 12.2 last year. Our revenue, as you can see, grew 8%. Our staff grew with 25%, so that is, I would say, the main explanation why we see a deterioration in the margin. It's I would say, a conscious management decision behind these numbers. Next slide, showing what I talked about before a little bit with stickiness to our clients. We have a business model. We do have very long-term relationships with our clients. Our billing and revenue model is often based on hours sold, but the clients and criticalness of these systems and other things that we do deliver to our clients normally it makes us end up with customer relationships that goes on for 5-6 years and even longer, and that is of course a big help, especially in times like the ones we are facing right now. The next slide, I think the last one, the future for us is obviously volatile, but we see a significant and increasing global opportunities. We are preparing for an acceleration and growth post-corona. We are hiring talent right now. Not that we are hiring anyone coming through our door, but we are quite excited actually, because the recruitment market has changed dramatically over the last 2 months, and all of a sudden it's much easier for us to attract and retain key talent, which makes us excited for the future. We will continue to focus on innovation, intellectual property and products, and always be prepared for further change and development. That is when we no longer manage to do that, well, then we can no longer be an expert within modern commerce. And obviously our approach, I would say, has always been a very high degree of customer focus, and we use a lot of agility in the way we work in general. I think that was it, Stefan. Sorry for stressing things a little bit.
Thank you, Anders, for the presentation. Unfortunately, we're running on a tight schedule, so I have only one question here until the time is up. And you mentioned that you have some short-term negative effect from COVID-19. I'm wondering about your visibility in the current market and how it has been affected.
Well, I would say, as I said before, our revenue and billing model, that is an hourly based consultancy model. However, we have long-term relationships with our clients. We have a kind of strategic, or we are partners in the more strategic discussions that our clients are having. So I would say that we have a fair visibility. I couldn't, put numbers to that visibility, but we can put a fairly good feeling to that visibility. And as I said, short term, definitely, demand is slower. Medium to longer term, we are quite optimistic actually that business will come back. But obviously, and we also don't give out any forecasts and stuff like that. But that is our definite feeling summarized.
Okay, perfect. Thank you for that answer, Anders, and thank you for presenting with us today.
Thank you for having me.
Okay, good afternoon, everyone. So my name is Axel Engvaken. I'm an IT analyst with ABG based out of Oslo, and it's my pleasure to welcome you everyone here today and to this presentation with Napatech. So we have with us Heine Thorsgaard, the CFO, who will lead us through the presentation before we head into Q&A. All right, Heine. So the floor is yours. Please take it away.
Well, thank you, Axel. As Axel mentioned, my name is Heine Thorsgaard. I am the CFO of Napatech. I'm here to present Napatech for you today. Slide 2, please. In brief, Napatech is a Danish technology company developing and selling high-performing network interface cards like the one shown on the slide here. Napatech was founded in 2003 and has from the very beginning been oriented towards customers in Silicon Valley, where most of our customers also are based today. We are a listed company. Napatech is listed on Oslo Stock Exchange and is trading under the ticker NAPA.OL. Today, we employ around 85 employees with offices in Copenhagen, Denmark, and in the US. And more than 50% of our employees are working with R&D. We have our sales organization present primarily in the US, but also in China and Taiwan and in Copenhagen. Our core competencies lie within R&D and sales, and we rely on a contract manufacturer for production of our hardware. Since 2010, we've worked closely with a US-based contract manufacturer specialized in building complex products in small production series, meeting the extreme high reliability requirements necessary to build hardware like ours. We sell our products primarily to large IT companies and large corporations and government agencies. Slide 3, please. As mentioned, Napatech is developing and selling network interface cards. Network interface cards are hardware components connecting servers to a computer network. They are often referred to as NICs. A NIC is plugged into a server or computer or piece of special purpose hardware built, for instance, for network management or cybersecurity. All standard servers are built with one or more slots for NICs to enable network connectivity for the server. Without network connectivity, the server is basically useless, and as new servers are deployed, customers need to deploy new NICs as well. There are different kinds of NICs. Generally, they are grouped in 3 categories. First, the basic NICs. These are simple network interface cards that enables basic connectivity from a server to a computer network. Second category is the offload NICs. Besides basic NIC features, offload NICs are able to perform certain fixed data processing tasks, and these processing capabilities are hardwired into silicon on the NIC at the time the NIC is produced, and they are fixed for the lifespan of the NIC. In the last category, you find the most sophisticated NICs. They are often referred to as programmable NICs or smart NICs. Napatech is producing smart NICs. Smart NICs are built with powerful chips on them. In our instance, it's an FPGA chip. And with this chip on the NIC, our smart NICs can perform a variety of different high-performance processing tasks. Where the capabilities of offload NICs are fixed at the time of production, the smart NIC is programmable, and it's possible to change or improve the functionality of the smart NIC by loading new software image on the chip. And this programmability provides a flexibility to networks designed around smart NICs. And with this flexibility, our customers can accommodate the changing needs, the need on their application level much faster than they would have with offload NICs in their infrastructure. But of course, putting high-performing chips on the NIC is more expensive, and where basic NICs start at around $10 each, offload NICs sell from $500 and up, and smart NICs sell from around $1,000 and up. Our position is to play in the high end of the programmable NIC market, where technology is needed to run mission-critical, compute-intensive applications faster, more securely, more efficiently, and with unmatched performance. This part of the market tends to be less price-sensitive, with customers needing a technological solution that provides best-in-class application acceleration and security. Our NICs are sold to original equipment manufacturers like IBM, Cisco, Polystar, and the OEMs design our smart NICs into their own products and ship them as an integrated part of their products to their end users. But we also sell our smart NICs directly to end user customers like Facebook, Airbus, or Morgan Stanley, who install our smart NICs in servers and deploy them in their own data centers. Our smart NICs sell with prices ranging from $1,500 up to almost $12,000 per unit, with product margins on average above 70%. Slide 4, please. Napatech's customers are primarily global top-tier customers, and we serve well-known brands like the ones shown on this slide. All of these logos represent customers that placed orders with Napatech in Q1 this year. Most of our sales go to global OEMs with whom we have long-term strategic relationships and where our sales volumes are committed through year-long design win cycles. Over the last couple of years, direct sales to large corporations and government agencies have emerged as a substantial sales channel, complementing our OEM business. We are very proud of our customer list, and a list like this one is a clear testament to the quality of our product. Slide 5, please. When our customers use our smart NICs, they're used to accelerate software. It's primarily software applications within network monitoring and management, within cybersecurity, within financial trading or mobile. Running their applications on our smart NICs, our customers secure better performance and they offload burdensome and intensive workloads from their CPUs. And using our smart NICs, our customers achieve significantly faster application performance on business-critical applications. They obtain significant capacity improvements in their networks from increased data throughput, and they free up expensive CPU time by offloading their CPUs. For customers, these benefits provide high value, and they are willing to pay the premium for a smart NIC to get this. Slide 6, please. Competing for orders from OEMs, Napatech primarily compete against other NIC vendors, but when selling to direct end-user customers, we also sometimes compete against other technological solutions than smart NICs. Some customers may choose to go for software-only solutions when performance and latency requirements allow this. But the value our smart NICs bring to our customers is high performance and flexibility. And our customers choose Napatech to get this high performance of applications and low latency at high speeds in the data centers, to get better cost performance of their server deployments and better customer experience with compute-intensive applications that simply perform better and more securely on our products. When we win orders, it's typically for use cases like the ones listed in the boxes on this slide. There's use cases for acceleration of open source applications for network management, network monitoring and analytics. It's increased performance of open source applications for cybersecurity. It's faster, more accurate network monitoring, better packet capture, more accurate network traffic monitoring, and improved service assurance for network applications. All of these are use cases where our solutions today are solving critical real-life problems for our customers. Slide 7, please. The smart NIC market is a very interesting market to be in right now. We are addressing a rapidly growing global smart NIC market estimated to grow at a 40+% CAGR from 2019 to 2024. Basically, the NIC market is driven by server expansion. Networks are built at massive scale these years, and they are built on servers. Technological megatrends are rapidly changing the way networks are built, but whether it is as part of cloud services, as part of corporate data centers, or as part of the emerging 5G infrastructure. Networks are built on servers, and increasingly they are built on standard servers with standard slots for NICs like ours in. Driven by this server expansion, the NIC market is growing, and with the accelerating network speeds and increased security workloads, the NIC requirements are changing rapidly as well. Slide 8, please. As a consequence, the NIC market is transforming. One of the leading industry analyst firms following the NIC market is called Aktier. They have been following the NIC market closely for several years, and they publish very detailed market estimates forecasting the development of the NIC market. In their most recent markets report, Aktier estimate the overall NIC market to grow at a 21% CAGR from 2019 to 2024, growing from $1.7 billion last year to $4.5 billion in 2024. But as their analysis also clearly shows, the NIC market is transforming, and where the basic NIC market is estimated to decline by 14% yearly, the smart NIC market is estimated to grow from $350 million last year to $2.1 billion in 2024. That's an impressive CAGR of 43%. Big players like Intel, Mellanox, and Broadcom are dominating the overall NIC market with a combined market share of between 55 to 60%. An additional 18% of the overall market is covered by Microsoft and Amazon producing their own NICs. And in total, these 5 players cover 75% of the total NIC market. But within the emerging smart NIC or programmable NIC market, several smaller companies operate. And of these smaller companies, Napatech is the largest player with a market share of the programmable NIC market of around 7%. We are facing a massive market growth in the smart NIC market, growth fueled by the fundamental megatrends, growth in servers, accelerating network speeds, and increased security workloads. In other words, the future of the smart NIC market looks promising, and the smart NIC space is where Napatech operates. Slide 9, please. For Napatech, 2019 was a promising turnaround year, and we've had a very strong start to 2020. Revenue in Q1 was up 27% compared to last year, and we delivered positive free cash flow in the quarter. The current COVID-19 situation, of course, has brought some uncertainty to the market outlook. But as industry analyst Aktier also reports, the pandemic brings both headwinds and tailwinds to our market space. The headwinds are potential reductions in IT spending at our customers due to their revenues being impacted by the pandemic, or supply chain issues impacting data center operations that are unable to continue with projects and initiatives due to supply restraints. However, there are tailwinds too. We are seeing spikes in demand for application and network capacity in different parts of the market, which spells an increase in demand for telecom and infrastructure. Napatech's revenue is not overly exposed to areas of the market that are most immediately disrupted by COVID-19, such as travel, hospitality, tourism, events, and other areas in retail and consumer. The markets and industries Napatech's revenue is mostly dependent on include telecommunications, cybersecurity, network management, financial services and banking, and various enterprise and government agencies. Our solutions are deployed in a number of mission-critical areas of the industry, from network management and cybersecurity, and then end-user enterprise and government agencies markets that require mission-critical applications to operate fast and securely. All of these areas are critical during a global crisis like COVID-19. All in all, Napatech expects revenue to be stable and less immediately impacted by COVID-19 in the first half of 2020. And from what we see today, our business is agile enough to find opportunities in this world of uncertainty. Slide 10, please. But let's take a step back and ask the question, why invest in Napatech? First of all, Napatech is a stable and growing company addressing a market estimated to grow at impressive rates over the next 5 years. And we are well positioned to claim our fair share of the market growth. We have a highly leverageable business model where top-line growth quickly converts into profit and cash generation. We are executing on our strategy and we are delivering product innovation, targeting growth in new emerging market segments. And finally, we have a proven technology that we've been selling to global top-tier customers for more than 10 years. And we continue to win new business with top customer brands. To sum up, we believe Napatech is positioned for success with a highly leverageable business model, facing a very large market opportunity. Next slide, please. So if you want to know more about Napatech, I encourage you to check out our website and to look at our recent Q1 presentation and the presentations from our latest Capital Markets Day. You will find these presentations under the Investor Relations section on our website. This concludes my presentation today. Thank you. Back to you, Axel.
Okay, thank you for that, Heine. We have some questions. Now, you mentioned during the presentation that COVID-19 situation brings both uncertainty and opportunities. Now, you haven't made any changes to your guidance based on COVID-19, but as you see it today, would COVID-19 be more likely to make you increase the guidance or lower the guidance? Would you say that it is net positive or net negative?
As we see it right now, basically we can feel both the headwinds and the tailwinds. All in all, it's probably a neutral setup for us with the basic market growth, of course, fueling our business. We in the first half, as I mentioned, of this year, did not feel any negative impacts of the COVID-19, but we clearly see some uncertainties relating to the second half of the year. We definitely hope we'll be able to navigate this uncertainty and continue our growth, but it is an unprecedented situation, and certainly uncertainty is higher now than at the beginning of the year. But all in all, as we see it right now, there's probably a neutral impact by the COVID-19.
Okay. Now, one area that you didn't talk that much about in the presentation is that you are evolving your product offering in the market, and you are, say, in the launching phase of this new virtual switching acceleration solutions. Could you talk a little bit about that, and could that be a potential catalyst for the company already in 2020? How much impact could this new product offering have towards the second half of the year?
We've been working on a couple of years on developing our products within virtual switching, and this is an area where product development and sales cycles basically take a long time. We are not. It's a target area for us revenue-wise in 2021, and we are not expecting any significant impact toward 2020 revenue top line from virtual switching. But we are making good progressing as planned, both with the product developments and with our interactions with potential customers. So we are, according to schedule, moving along this, but it is more 2021 impacting the business.
Mm-hmm. You had a strong growth in Q1, and you have high growth in your guidance. Now, for the last quarters, you have produced positive free cash flow. But how do you feel about the balance sheet, and are you sufficiently funded to fund the growth strategy, or would you expect that you would have to strengthen the balance sheet in order to deliver on the growth strategy?
We do feel we are sufficiently funded for the growth laying ahead of us. As you know, we raised cash early last year, and then basically we've been producing a positive free cash flow ever since. So we are not spending the cash on our balance sheet. It's especially in times like this with the uncertainty. It's a comforting thing not to be overly burdened by debt, and so we feel in a good position. We feel we have the strength of the balance sheet that we need, and as I also briefly mentioned, our business model is basically in a way that growth quickly turns into cash generation. So growing forward, we'll be improving our cash position according to plan. If we were to accelerate our investments in new product development, depending on whether or not we feel the opportunity is right, we might be in a position where we would decide to start spending a bit more cash. But as it is right now, we feel good about the cash spend in the company, and expect basically that the growth from the market would be able to generate additional free cash flow for us going forward.
That was very clear. Thank you. So one last question. Now, Napatech is a fairly small company, but with a very impressive customer list. And then given that distribution, would it make sense to maybe do acquisitions to broaden the product and service and software scope? What do you think about that potential to do bolt-on acquisitions?
In the short term, acquisitions is not on the list for us. But if we look further down the line, 2-3 years from now, acquisitions of products or other companies might definitely be a way for us to increase our growth, and we would basically look at that when we get to that point. But as it is right now, market opportunities are strong for us with organic growth, and we are focusing on growing the business organically in the short term.
All right. Very helpful. So I just want to end with a thank you. Thank you for the presentation and for good answers to the questions. Now, from my side, I hope that everyone have enjoyed the presentation, and I will let you finish, Heine.
Well, Thank you very much, Axel, and it was a pleasure, as always, talking to you. Stay safe.
All right,
Bye.
You too. Okay, take care. Bye-bye.
All right. Okay, so it's time for the day's last presentation. We have Swedish Stirling with us, and we have Gunnar Larsson, who is the CEO and the founder of the company, who will present the business, and then we will follow up with a few questions. So I start off by leaving the word to Gunnar.
Thank you very much, Oskar. Yes, I would like to present Swedish Stirling, a Swedish company which I founded in 2008. Under the company, I used to be the CEO of Kockums, the Swedish naval shipyard, and that's where I found the Stirling engine technology that I founded a company around. And next slide, please, Oskar. And initially, we started out doing solar energy, but in 2015, we discovered an opportunity that have been the full focus of the company for the last couple of years. And this is really related to production of metals, which is done in smelters utilizing ore from the ground. And typically what is done in a smelter is that you mix that ore with something that can react with the metal oxide in the ore to form the pure metal. That's the whole purpose of a smelter. And usually that is carbon that you mix with the ore, and then you provide a tremendous amount of energy to stimulate that reaction, and you get pure metal. But you also get waste gas from that process, and that is simply the carbon reacting with the oxide, forming carbon monoxide, which is a combustible gas. But what I learned in 2015 is that there has been trials with different technologies to utilize this gas for energy recovery for the last 45, 50 years. And most of those trials have been unsuccessful. And knowing the Stirling engine technology, which I know at that time, it is quite obvious that energy can be collected with the Stirling engine and converted to electricity. So that's really where we started with this business concept. And looking on the total potential, there is a tremendous amount of energy in those gases. And if you actually combine all the flare gases in the entire world, there is a potential to supply the whole electricity for a continent like Africa, if you could actually convert everything to electricity. So we realized was a tremendous opportunity. And next slide, please. What we did was that in 2017 we presented a concept that we have named the Power Block concept, and we introduced that into the South African ferrochrome market to start with. And the first launch of the product was by having customer meetings in South Africa in September 2017, and from there on we actually made our first sale with the first contract already in December 2017 to the smallest ferrochrome plant in South Africa. And so that went very quickly, and of course the basis of that is that it do save a lot of money for these ferrochrome producers. And going forward from that, we have managed to secure a first contract both with Samancor and Glencore, who are the two dominant players in the ferrochrome industry in South Africa. They more or less have half of the production capacity for ferrochrome each, and we have managed to sign contracts in 2019 and 2020, beginning of this year, to get traction with both those companies. With the Samancor, we are installing a pilot plant, but that is being installed right now. And with Glencore, we signed a contract for a larger installation of a total of 10 megawatts of capacity with one of Glencore's smelter plants. So of course this has been going very quickly for us, and the reason for this is there are a number of reasons, but I think the most important is that there is a tremendous opportunity for these clients to save a lot of money. Their biggest bill is electricity. If you look on the cost base, they have about 1/3 of the cost base originate from electricity to the smelters. So it's a huge significant cost, and we managed to prove to these companies that we can save up to 15% of that installing the power block technology at their sites, and saving 15% of 1/3 of the cost mass, that pretty much translates to more than a doubling bottom line for these companies. So the financial driving forces are really strong for doing this. We installed the first unit with our first client. We did in May last year, so that has been an important platform for actually convincing these two other big companies to invest and go ahead with the technology. Next slide, please. Then a few short words about the technology in order to understand why these Stirling engines actually can harvest this energy in a very efficient way. If you look on the left-hand side, that is the basic principle for a Stirling engine, and there are basically 2 cylinders and 2 pistons connected to one crankshaft, and the cylinder volumes are filled with a gas that is connected together to one gas volume through a pipe. And that gas is completely concealed in the interior of the engine, so it's not consumed in any way. And what the inventor realized was that if he started to spinning that crankshaft, that gas will compress and expand, and when it's compressed, it will consume energy, and when it's expanded, you will get energy back from the expansion. And what he realized was that if he did the compression in a cooler environment and the expansion in a hot environment, it's going to be beneficial because it's easier to compress the gas at the cooler temperature, and therefore there will be a net energy going out on that crankshaft. And what is happening is that the thermal energy that you supply to the engine, you do on the exterior to heat up the red one. It is that thermal energy that is converted in the engine. And it's a very efficient engine principle, and you don't do anything inside the engine, you just supply energy on the outside. And it doesn't really matter how you do it. If you have heat, that heat can be converted. And this is exactly what we do with these flaring gases. Because the flare gases, they are more or less impossible to manage by an internal combustion engine because of the variation of quality of the gases. But that is not affecting the Stirling engine at all. So next slide, please. So going to the power block concept, so what we did was that we put the Stirling engine that we had at that time, which is a 30 kilowatt Stirling engine, and we fitted 14 of them into a container, a standard 40-foot container format to form a 400 kilowatt power conversion unit consisting of 14 30 kilowatt engines. And we managed to demonstrate and validate through the Lloyd register that we, by doing this, we reach the lowest cost of electricity of all known sources today. And we also have the highest impact on CO2 reduction of all technologies known today. And this was validated last year by Lloyd Register. So there are, and of course, the reason for this is that we are simply using a waste energy source, so the fuel is for free, and the capital utilization is very, very high, since these smelters are running on a 24/7 basis all year round. So that makes a very attractive economic and environmental effect of our technology. Next slide, please. We have set up a very detailed sourcing model for our technology. The Stirling engine technology, the basic technology that we licensed from Kockums already in 2008, have been completely adapted to the automotive industry standards and standard components in order to have a way of bringing down the cost of the technology. And this is really what you see on the right-hand side. Already in 2008, we formed a partnership with Scania, the Scania heavy truck company, and their gearbox factory in Sibbult in southern part of Sweden. So we have been working closely with the engineers in this facility to adapt that engine to automotive standards. And of course, the objective have been to base the entire engine to as large content as possible standard components from automotive industry, which will actually be very helpful in bringing down the cost. And of course, we have a quite a steep decrease of cost with the production volume. And as a rule of thumb, you can say that the cost will about half of the manufacturing with every 10-time increase in production volume. Okay, move to the next slide. Looking a little bit more on the potential market for the product, we have, as I mentioned, started with the ferrochrome market in South Africa. And with the traction we have with ferrochrome and Samancor and Glencore right now, they have a need for about 550 units. This is going to be in the order of 300 million euro of sales, where we have contracted in the order of 25 units at the moment. The next obvious step is, of course, after ferrochrome South Africa, where we actually focus right now to get the full acceptance of the technology from all possible stakeholders. We concentrate in one market and one place. But then next obvious step would be to look on the ferroalloy global market, and there we typically have a potential of 6,500 units, which is a market potential of 3 billion euros. And of course, these markets, we definitely know that the technology will work as it is based on those gases. We know them very well, but of course the next step is also to look on other gases being flared internationally, and there, of course, the market potential is huge. There we talk about 100,000 units, but exactly what parts of that market we will address and reach we haven't really any good vision on right now. But only looking on the ferroalloy global market, it's a fair and sizable market going forward for the next steps. And of course, mentioning also some curiosity about these companies in South Africa. If you look on Samancor, for example, their total consumption of electricity is about 1/10 of the total electricity consumption in South Africa. So adding Glencore have as much, so they have 1/5 of all the electricity usage in South Africa. So it's a huge electricity consumption. And if we populate all these 550 units, we will decrease the need for coal-based electricity by 2% in South Africa. So it's a huge impact. And Samancor, for example, they have an electricity bill every month of 100 million euro. So there is a lot of money for them to save there. Okay, next slide, please. Then a little bit more on where our focus is this year. We managed to secure funding in March this year of 147 million Swedish SEK, and where the Spotify founder Daniel Ek was the lead investor. And that was, of course, I think, have given us a very strong position where we have the cash in the company right now will last for at least the full next year. And this is, of course, very good position to be in given the circumstances in the world economy right now. So we have the capability and to simply executing our plan going forward. So right now, as I mentioned, we are installing the first power block pilot plant at Samancor, which will be the vehicle for going forward with the Samancor, and we are quite sure that they have the intention to populate all their smelters in South Africa. We are very much focusing right now with the hiring of global sales and marketing director. We are now in a position where we see that it is going to be time for us next year to broaden the geographical footprint of our activities. And we have been very focused on South Africa, but we are about 6 months to a year away from where we will start and really looking on other markets, and therefore we will need that competence addition in the company. And of course, big focus on Glencore and Samancor and moving those companies further. And of course, there is a huge interest from many different parts of the world, and we have very good traction also in ferromanganese business, and we also have interest and discussions with companies in Malaysia. And we actually also have some interest here in Sweden as well. which have developed over the last couple of months as well, which looks really promising. The situation in Sweden is a little bit different from South Africa and other parts of the world, where we to some extent are utilizing these gases for district heating, but there are opportunities here in Sweden as well. So that concludes my presentations.
I would like to start off with a question regarding the power block. You have for some time now said that you're developing the next generation of the power block and doing some improvements. Could you develop a bit further on what you're doing in that area and how that work is going?
Yeah, we, as always with these kind of products, you are developing that in generations. And the first generation of the product we installed very quickly from where we actually got the order and to delivery and all the development work to make that work and being installed. That was done in about one and a half year. And that unit has been operational there for a year now. And the next step, generation 2, that is installed now in Samancor. And of course, the main improvements there is really to prepare a better base for developing a cost reduction of the product. So if you look on the cost level for us to manufacture from the first to the second, it's about the 40% reduction of cost. And generation 3, that will be the baseline, and it is the fully industrialized product that will be delivered in volumes, that will take a further step down in cost. And it's a lot of optimization work that is done in order to adapt it to a more volume production capability. And when we started the product, we sold it so quickly. It only took 3 months to the first sale. So we really didn't have the time to do much of optimization for the first generation. We just had to go for solutions that we know were gonna work right away. And we couldn't really take any risk there until we got more experience. And now we have more experience, have been able to optimize different systems to reduce cost and also to improve performance, to be quite honest. You get that on the same time usually, that you get better performance and better functionality and more user-friendly product for the customer.
Yeah, I understand. And in conjunction with your last quarterly report, you also mentioned that the ongoing corona situation has created a couple of opportunities for you in this arena. Could you develop a bit more on that?
Yeah, first when you realize that you have to take measures in order to prepare yourself for a world economic crisis, we of course that is a lot of hard decisions that have to be made, but we could it actually also opened up for us, because since we have a good cash situation in the company and have the luxury of forming our own strategy and continuing with different activities that is beneficial for our product, we can actually utilize that to get really better response from sub-suppliers that potentially wouldn't be interested in us until we get higher volumes, and that is going to be really beneficial for the product. And we have already been able to make quite a bit of cost savings on the product cost as a result of this. And this is simply that the overall situation for many of the sub-suppliers has become much more difficult, and that really puts us in a better situation where we can negotiate better contracts and get competence and interest from sub-suppliers that can actually develop our product.
And just an interesting thought on that, the graph that you showed on page 7, I believe, with saying, gross margin around 30-40% at 70 power blocks. Is that incorporating these, optimizations and cost savings that you've been implementing, or?
Yes, it is. Because it is when you see that reduction with cost, it's not only a function of volume, it's also a function of adapting the product for higher production volume, and also creating an environment where you can put as many as possible of the components in a competitive tendering environment. That is what is really bringing down the cost, and that is of course always related to an engineering effort as well, because you have to continuously adapt your product to new processes that is more fitted for higher production volumes. So a lot of this work, of course, is included in that as well. You don't get that reduction only by volume. You have to adapt the product to more volume capable processes all the time as well. And of course that is a time scale on that as well.
Understood. And just a final couple of questions. I think, obviously huge potential here with, flare gases globally and different sort of ferroalloys. I think, now you're in South Africa, which really has a perfect storm for this market, and the high electricity prices and lots of flare gas. But could you develop a bit on, are there any other geographies that have the same sort of profile that you would like to target? And perhaps also a bit on, adapting the power block to run on different sort of ferroalloys or flare gases. Would that require further investments, or how does that work?
Well, let's start by the gas question that you ended with. I think that's a good start of it, because adapting the technology to other ferroalloy gases is the conclusion of that is that no adaptation is needed. For all the ferroalloy gases, they are quite similar, and the technology is really not it doesn't really matter too much about variations in quality, so there is not going to be any substantial investments needed to reach the global ferroalloy market that I mentioned earlier. And of course that is probably the main reason that why this market is something that we are going to look on as a next step. And we also want to have a geographical spread, and there are many places in the world where this will present a very good economical business case. As I mentioned, right now we are discussing with a Swedish company actually to engage in a project, and as many of you know, Sweden has the lowest electricity price more or less in the world. It's very difficult to find anywhere else where we have as low prices as in Sweden, and there is still going to be a good business case. Of course the business case will be better if you pay more, and if you look, for example, long term, it's going to be impossible for us not to look on China, for example. China is the biggest producer of ferrochrome, and they have a lot of metal production in China, so that of course will be a big market. But I also learned from experience that China, when you enter China as a market, you really need to be prepared, and you really need to do that from a strong position. So I'm not sure that is going to be the next step for our geographical expansion. Probably not, but down the road, of course, China will be an important market.
Understood. Thank you. I think we have to round it off there. I just want to say thank you so much for joining us today, Gunnar. And it's always interesting to listen to Swedish Stirling. So thanks a lot.
Thank you very much. Thank you.